keeps ticking, but I won't slow down. Building my empire in this buzzing town, casting my vision on the silver screen, my funded life, a vivid sheen. My funded futures light the way.
Good morning, traders. Welcome to My Funded Futures and My Funded TV. Terry trades 100, and we have our expert traders, Bull, Barbie, and Nick does futures. Good morning, chat. Good morning. How is everyone doing so far?
I'm doing pretty good. Not a bad data drop this morning. Well, I guess it was bad, but as far as
Yeah,
indicators
dropped,
go.
what it dropped, like 130 points. Kind of crazy. We'll see how we open up at 9:30, but hopefully it's some sort of manipulation lower to go higher.
All right. Who'd like to go first? Barbie or Nick today?
In technical terms, I'll go ahead and knock it out.
Okay, thanks, Nick.
Let's see. So obviously, at 8:30, this is the news candle from PPI. Let me just check the actual number here for some of you guys that trade. So that number was expected 0.2, and it came in at 0.9. So
hot.
Yeah. Hold on, I said my mic is causing echo.
Okay, there it is. Should be better now.
Oh yeah.
So I'm actually going to be, thinking we're going to get a move higher since we are inside of these 4-hour points of interest and these daily points of interest. And I'll just be looking for my normal setup here. So maybe like on the 5-minute, move lower, create SMT, and then I move back up here. Barbie, since it says on mine that the number is 0.9, but it's green. So that would be good, right? What am I tripping?
So that means that the price of finished goods is up, right? So that means the cost of things is higher. So that's not necessarily good.
Yeah, that's what I figured. I don't know why they have it green on here. Okay. Yeah, that's what I thought. So that's probably why.
I think it's just if the number's higher than the previous, then it goes green, and if it's lower than the previous, it goes red.
Okay. I could swear I've
not good or bad. I don't know. Maybe they changed it.
Yeah. No, you're probably right. I just remember I thought for sure I'd seen a CPI number that went higher that was red, because obviously the higher CPI number not very good, but could have just been tripping. Yeah, so I might be looking for something like this back up to the upside. Although that number is pretty way off. It's not like 0.1 or 0.2 off. That's 0.7 off. So, however, I'm still going to remain bullish because these are great areas for me to buy in. So, like I said, I'm not going to be going the other way just because of that number. I'm going to wait till confirmation. Maybe I'll close below on the daily first. But yeah, no, that's pretty much it for me. I'm only really looking at that EU, not looking too hot ever since the missed entry I got here from 2 nights ago. But yeah, no, gonna be looking for upside. Even though we did have that news, that big move down, but it could get, pretty explosive to the downside, I think, for sure.
Thank you, Nick. Barbie, what are you thinking today?
Well, I'm going to give a little bit of a contrarian to that. I know that the data is coming poorly, but I'm also kind of watching it where the data brought us down to, which is on the daily, kind of at support. So while, yes, we could continue this move, there's definitely some reason for that to happen in the market. If there's uncertainty, the market tends to move down. But if this isn't enough to freak the market out too terribly, this is also a really good spot to buy. So I'm not saying that one of us is right and one of us is wrong. This is kind of a good discussion point. There's this is actually what I was playing on data this morning too, is I was watching the 6460 level, and I actually bought this for a quick little scout bounce this morning, just because I see this as really strong support. So if we don't do like what Nick was talking about and have the continuation lower, because we are kind of stalling right at that exact spot that I was watching for the market to be a good buy area, I'm still kind of watching this as a buy area. In order for that to confirm, I don't want the morning to be trading below here, come back up and test it, and then just hold below. It needs to really stay above this level to give me comfort on that. So if we do hold this area, the next kind of area that I'm looking at is the 64.75 to 80. And originally I was looking at 75, but this 80 level is becoming more and more interesting to me. It's kind of the top of this zone that I had looked at. And that's based on this overnight, how, well, both the overnight from the other night and then the overnight from the current day really tried to hold that. So even though regular trading hours went below it, there's definitely somebody doing business and really watching that 64.80 level. And then, of course, above, we still have the 6,500 and the extensions that I had mentioned the other day that I was looking at. So I still see that as a possibility where, as long as this holds, which is the opposite of what Nick's looking at, then we can kind of have this move forward. I have noticed, though, I don't know if this is, I didn't used to be this bad about this. My bullish trades have been making so much more money lately. I guess it's like a thing for this year. I've just been leaning into bull Barbie, I guess, because my bullish trades have been better. So it might be a little bit of that where I see this trade a little bit better than I see the dump trade. But I do see that here too. So if we lose this support, kind of the next obvious spot down here is the 64.40 and then back down into the 64.25, 24 area. So I do see that as a possibility, and those are the targets that I've been going. I just I guess it's partly because I've been looking at my results, and my results are my bullish trades profit more. I'm like getting kind of biased towards wanting this plan, but basically the 64.60 on ES is going to kind of be my line in the sand today for that.
Thank you, Barbie.
Is it possible we hold it?
Yeah, no, I mean, I could definitely see us, selling off a good bit today, but I just feel like this is one of those things where it gets, it spooks everyone out, and then oh wow, we're back at the relative equal highs from before the news happened. You know what I mean? Like I've seen it so many times, especially in a bullish market. Now, if we well, I don't even know if I believe that. Like if the numbers would have been good and we just would have shot up it, I don't even think I probably will believe the short either. So I guess that's just having following and sticking to the trend. But like I said, if people want to be devil's advocate, I mean, wait for this hourly gap to be put in here, maybe like 10 o'clock. That would give you better confirmation. So maybe if there's like an hourly gap and then you get a very explosive move up into it and then a move away from it, yeah, I'll obviously take that short. But yeah, no.
What do you think, chat? Are you seeing more of the bullish possibility where we trace this data and the market doesn't care about it, or is this data going to be a big deal to the market and keep the dump going?
Yeah, type in S for short if you're thinking shorts today, or L if you're thinking longs, or N, no trade. Yeah, we are just made all new highs yesterday. Anything can happen. I see what you're saying, Nick. As far as like in a bull market, sometimes like we get bad data and the market just shrugs it off. Like at first it's like a panic and then a quick small mini panic and then it just shrugs it off and then it's like a V reversal. Yeah, I've seen that too.
Yeah, I mean, I think a good example for a bull case was a month or two ago where they reported there was like a surplus of money coming into the United States, which is like haven't happened in like a very, very long time. And the market, kind of reacted in a positive way. But that was just like one blip, So I think after that, the next month, I think it kind of just went back to like its normal thing. So yeah, but I mean, 0.2 and 0.9 like that's a pretty wild difference there. So that doesn't look good. at all
Do
if you're just going off numbers.
Do you guys think that could potentially affect like the expected rate cut in September?
Well, I think
Well,
that's close to like 99%, 97% of 0.25, right?
yeah, I mean, they're trying to talk about 3 rate cuts yet
3,
this
yeah.
year, so basically cutting every single meeting, and that's a little wild, actually,
So
compared to
interesting.
everything else we've been doing this whole year of pausing.
Whew. Drama in the markets, you guys. We will see what happens. I did jump in on a short, and no surprise, a short with just one micro based on that news. So we'll see what happens, risking 100 points for 100 points. And this
Just
is
start calling you Bear Terry.
I know. But I will say, to be a bear in a bull market, you got to be fast, I think is key, right? Like for a day trader, can't, I'm learning, you cannot hang on to a short in a bull market. It's very tricky. So yeah, a bear Terry, I'll take it. Sounds kind of cute. Teddy bear Terry. So everyone be good today. I was typing in chat. I was like, you guys, smash that like button. It's good luck. It also means that you're going to be good today. No full porting. Let's not full port today. Do you guys ever get the itch to full port, Barbie, Nick?
Nah,
Never?
No, I mean, but I'm not totally sure what full porting in futures would be. Is that like taking max contracts? Because, leverage works a little bit differently. Like for me, for coming from an options background, full porting would be if you have a $10,000 account, buying $10,000 worth of SPY 0 DTE options or something like that.
yeah.
And no, I don't do that because I need my account tomorrow. If I don't have my account tomorrow, I can't do my job.
Yeah. And we definitely want a job tomorrow. So no full porting today. I'm practicing that with my 1 micro in this account. I will full port evals. When I'm being naughty, I will full port funded accounts, which is naughty, right? Is bad. But yeah, with evals, sometimes I just get very impatient. So full porting in these evals would just be like max contract. So in the 50K core account, the max that you can have in an eval are 3 contracts. So that would, in my mind, that's full porting. But once you're on the funded side, you're allowed 1 mini at first, which I think is actually really great. It helps us, protects ourselves from ourselves. I think a lot of traders, developing traders, need that help. Oh, Pine Tree Trader says, I never full port either. Wink, wink.
Yeah, like even I mean, if you're talking about I mean, the only time I full port is like evals. So like on a funded account or like
that would be smash or pass, right? So that's kind
Yeah.
of a eval strategy.
yeah, but like on a futures funded, like I'm not doing that. That's stupid. You know what I mean? It's just about being here it's about being here tomorrow. You know, tomorrow it won't be guaranteed. Like I will not be here tomorrow if I full port. I mean, maybe, but I guarantee after the next day or over time that won't happen at all.
Yeah. Stone said, I full port my live account. Oh no. High risk, high reward.
Yeah, those options accounts, people start those with like what, like $5,000-$10,000. They'll full port those and like a 0 DTE. I see people do that all the time.
Yeah.
Is, I mean, if it goes 100%, I mean, freaking, you're up you're up a good bit, 50 grand or something. So.
Oh, it is high risk, high reward. It's double-edged sword. Like if you're going to go all in, like, yeah, you might get 100% return in one day, but also you might be completely wiped out in one day. Like it's risk of ruin is so high. Yeah, it's and I think a lot of newer traders and developing traders, we often think about like the winning side of it. Like we're like, oh, if I, triple my contract size, I can get $600 in 10 points instead of $200, and not thinking about, oh, well, I could also, my account might go negative 600 today. I don't know why it's so common.
Yeah. Yeah, I think people should just high risk, the double-edged sword that rhymes.
Have you seen that, Nick, with like traders that you help?
Like full porting in their account? No,
Oh,
not like
just traders that are often think about the winning side, but not about like the losing side, the
yeah, no,
liquidity
all the
side.
time. Yeah, they get in every trade thinking, oh, I can make $2,000, $3,000, $4,000 on this trade. But I'm like, okay, cool. How much you risking? Okay, 4 minis. You know how much you can lose, right? If it goes down here, like how much? $2,000. Oh my god, didn't think about that. You know, so
Yeah.
uh, you just kind of you always kind of have to think backwards in trading. People come into it trying to make money. Just kind of come into it thinking how much can you lose, right? And then from there you'll
I
kind
think even when we're thinking about that, we always think that the likelihood of getting that profit is more likely for some reason. It's like, oh yeah, well, you know, maybe I'll make $1,000, maybe I'll lose $1,000, but maybe I'll make $1,000. And we don't really internalize what losing that $1,000 is going to look like on our account. And that's when we end up moving the stop loss and making it a $2,000 loss instead of a $1,000 loss and that sort of thing.
Yeah, and that's when like that panic can set in, and then that fight or flight, like, I gotta fight now. And I know I've heard traders say you accept the risk ahead of time. Like you have to fully accept it. And I heard you use the word internalize, Barbie. Like, are you internalizing that loss? Like, am I okay? So on this mini, for example, I can stomach this, a $200 loss. Like, yeah, no problem. I can go to bed. I can go do other things and not like sweat it. But if this loss were like potentially $1,000 in an eval with only $2,000 worth of drawdown, honestly, I don't know if I could stomach it. Like I can. Would it feel good? No. Would it trigger that me wanting to fight? Probably, potentially. Yeah.
yeah, no, I can't do that.
No.
It's also too like you're part of like you're kind of giving up like your mind a little bit, right? You're kind of like you're doing like me. I trade like so well mainly due to just being low stress. Like I don't really get stressed out in positions anymore. So like I like now that like I've taken trades where I've lost and won, have won with like having like the mindset I have. Like I don't really want to do stuff that's gonna put that in jeopardy or harm's way, because I know if I start doing that, I get too emotional, and then that's when these other triggers start to come out. So I don't know. I know for people watching, like it's definitely tough hearing us talk about stuff. And, oh, those people don't have any idea what they're talking about, because I made this yesterday, but I guarantee like slow and steady wins the race, right? Like if you're getting those, if you're trying to get those big fluctuations in your account, like if you're seeing them like where you go up a good bit, then come down, go up, well maybe like lose more than you win. Like that's just not a good mindset to be in. You're going to do a lot of, you get very emotional and do a lot of uncharacteristic things.
Yeah. I like that. Like protecting the mental capital.
Yeah, literally. I think that's just as important as like technical stuff. Like I say, I don't even think I'm that good of a trader. I think I'm very good at losing. I guess that's a good way to put it. Yeah, because if you know how to lose, you can stay in this game for a while. If you don't, then you're gonna get run out very quickly.
Protecting that downside and not doing all those stupid things in between.
Yeah.
Someone had a comment. I'm going to maybe go on a little bit different train of thought, but I was kind of thinking about the newer trader versus the older trader. And so, of course, a newer trader is going to make more mistakes because you don't have the reps and you don't like just the literal experience in getting those things and actually accepting risk and actually accepting losses. But more importantly, actually waiting for the plays and actually being disciplined and actually only taking the trades that you want to take. And it's not like that makes you invincible and perfect and a can't lose trader, but that makes you to where those losses aren't a big deal to accept. I really don't even give very much thought to losses anymore. It's just a part of my day. So I think that's the difference. It's not like a seasoned trader is going to be more perfect and not have losses. It's just they're going to be much more according to the plan. And when they're according to the plan, it's really not a big deal.
Mm-hmm.
I agree with that 100%. That's a good way of putting it. I don't think I'm much. I don't think I'm better than some of my students in terms of technicals. Like, but like, man, their mental and mind, like it's miles ahead on that front. Because they'll come into it trying to, oh well, I need to get payout. I need to get payout. I'm like, bro, I don't think about payouts or making money like at all within the market.
It's really crazy though, because I swear, like the less you pay attention to your actual balance and those payout goals, the easier it is to get to them.
I've always said, I can't use the word I'm going to say here, but I always say like the less I give a crap about trading, the better I get. The less I care about making money, like the more I make, right? With
fact. That's like last month. It wasn't accidentally. I mean, I was busting my ass, but I didn't even realize until I'd gotten to the end of the month how big the month had been, just because I was just focused on one trade at a time and one day at a time. And I actually wasn't really worried about which accounts I was getting to pay out or what I was going to withdraw from my main account. I was just showing up and doing my plan. It helped so much.
There's a very good speech I was watching. It was on YouTube. It had nothing to do with trading, but like I could hear, like it related to it in a way. It was the Alabama old coach Nick Saban. He was talking about just football and his process and everything. And every single day, he don't think about the game the next week. He just think about Wednesday and Thursday and then Friday and Saturday, like just preparing each and every single day. And he also talks about how a lot of games that he plays or he'll coach, and they're all like 99% of them are more lost than they are won. So a lot of like the other team or his team are making more mistakes rather than another team just going out there and just playing insanely good. So that's a lot like trading too, right? A lot of these accounts that you guys have, or even your personal accounts, like, and even the bad trades, like a lot of them are just like you not following your rules or stuff like that. So try to just stick to that process that you have rather than just go out there and try to make money and just focus on the wrong things. But I think more accounts are blown more than they are actually like follow the rules and then blown. You see what I mean? Like a lot of stupid stuff has happened in order for you to blow the account, rather than like you following your rules and you just happen to blow your account. Maybe when
you've actually followed your rules, it's so much easier to accept your loss, because that's where your stop loss should be. It's not like you're trying to move it and will the market to do something else. When you're actually disciplined and follow your plan, that's the easiest time to accept the losses.
Yeah, no, 100%. So yeah, that stuck with me. More trading accounts are blown more than they are just like pure, just you just like lose them, right? Compared to like following your rules. So that's a very I'll see if I can find it and post it, post the link. But 3 minutes to market open. We'll see. Let's see what happens. Still kind of going lower. Relative equal highs on NQ or something I'm watching. ES got highs up here. So yeah, we'll see. I want to see how 9:30, like 8:30. I always treat 8:30 news and 9:30 open is like two separate sessions. So like I think of 9:30 is like a whole different thing. So I want to see if we like move up or we just keep going lower. We did hit the weekly objective for the week on Tuesday. So are we gonna seek lower prices now? It could be something people be playing like a midweek reversal where we just go lower from here on out. I'd be surprised, but I've seen it happen before. I have one funding account where I've been trading for 12 months. Risk management is key. Oh wow, 12 months. That's very, very good.
That's very good.
Yeah, I know people who cycle through fundeds because I will say I won't say they over leverage, but like if the drawdown's $2,000, they're risking like $700 per trade, so they're really only giving themselves like 3 trades. To really build it up or build a cushion. So if they have like, just two losers back to back. But it seems like you got good risk management and you have a good process. and everything. But yeah, that kind of speaks to what I was saying earlier. Even if it's not insanely, profitable account, maybe it is. You're not losing it. You know what I mean? So I think that's very important.
That's such a good practice, like a challenge. Can you trade whatever plan it is that you have set out for that account? And whether you reach payout or you lose the account, can you just stick to that system or whatever process you initially set out to do? Because yeah, when I think about all the accounts that I've blown, it's not because I was sticking to a system. It was like erratic trading, like like let me quadruple my size to like get back losses, or just like going on tilt, right? If we're completely honest with ourselves, like a lot of developing traders, it's like, why is it like that I am losing accounts? And for a lot of people, it probably is just like not sticking to a system. Oh, less than 1 minute until the market opens. Barbie countdown. Is Hunter in the house? Hunter, are you with us? No, Hunter.
Right. 3, 2, and 1.
Ding, 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 ding. Are we open? Let's go. Market is open. This first candle is pushing green. NASDAQ is down by about 70, 80 points right now in the red. And ES is down by about 19 points. This is that 5-minute PPI candle. It was not a pretty looking candle. Buyers are coming in. Market is trying to figure out what it wants to do from this opening price.
Sorry, my dog has an ear infection, so I had to go get his cone. That goes
Oh
around his head.
no.
Oh, the cone of shame.
Yeah. He I swear, if he doesn't have like, if he doesn't have like an ear infection or like a dingleberry, that I like, it's one or the other. Like,
You said dingleberry on live TV. I didn't know what a dingleberry was for the longest time.
Dingleberry. Just a naughty word. Dingleberry.
yeah.
I think this
there's
candle is
actually
like a
someone
dingleberry.
I actually think there's someone in my Discord, or Discord I was in. It was called like Dingleberry Trades or something like that. Yeah, these are blue light glasses. I'll type in the. Yeah, well, he has like this ear infection where he just keeps like flapping his ears, and it's like annoying. And I'm like, I keep looking back. I'm like, dude, like I'm on stream. Can the ear infection just kind of chill, bro?
Poor baby.
Yeah, I don't know. Let's see what happens here. Looks like I'm on ES. Not.
So will we get a full retracement of this news candle? Let's wait and see. It looks like it went up. It's trying to test VWAP here. About 50% almost retracement so far.
I don't know what's going on so far. We'll see.
Yeah. Waiting to see what the vibes are for the day.
There is a S&T inside this gap from London. Oh no, I'm sorry, from New York yesterday. Tuesday. Sorry.
The daily candle said stuck in a news pullback range. Ooh, Leon is 5 minutes long. Good luck. Leon Liz. Ooh, break even now.
I actually think this could be moved lower. I think this could be a fake out for a move lower.
The toxic X.
Yeah, the toxic X that she's good
You can tell
someday.
Nick has some trauma.
Yeah, don't give me some trauma. It's too much trauma from all those exes. You know, they say all my exes live in Texas.
Do they?
Yeah. Actually, I've been in Texas a couple times. Actually,
They probably have all moved here. I'll give you that.
yeah, they moved away.
Everybody
They
has
moved
moved
away
here.
from me. Pull back to the 4 hour. Yeah, no, the 4 hour chart looks very solid. There's a 4 hour gap that's also lines with the daily gap in there. So, yeah, my only thing is ES is delivering completely opposite of what NQ is doing right now. So I'm definitely gonna give it a couple of 1 or 2 more 5-minute candles before I have a little bit more confidence. Yeah, Nick, what if you were the toxic one the whole time? I would believe you if your name wasn't Mr. Delusional. I'm just
It really
kidding.
is a great
It
screen
could be.
name.
It could be. I could be the toxic one. 100%. Oh wow, NQ's pumping.
Ryan, congrats. Up 1.5K on the day. Let's go. Oh, we're trading above VWAP now.
Indeed.
Is ES pushing too? ES isn't quite above the VWAP yet.
Now they're both pushing.
They're pushing. NQ is red by about 40-ish points. It's trying to fill that gap.
VIX is coming down here, so this looks good for the move higher.
Yeah, I went on Twitter earlier, right when the numbers, right when we started the stream, just checking out like what everyone's sentiment was on the numbers. And the first couple tweets like holy bearish, and it was just like talk about the PPI numbers. And I'm like, okay, you know, it was like those like classic like Reddit accounts or things like that. The market's over, you know, so we'll see what happens. Let's see if we can get back to the 830 high. Would not surprise me one bit.
Like the world is falling down, like those accounts.
Right.
That's like most of them on X whenever the market pumps.
Yeah, I mean, you know, so some they're just trying to capture engagement, right?
Yeah.
66 through 70. So chat, what's y'all's favorite account? Favorite new account with MyFundedFutures? Someone was asking me. I told him the pro account.
I've actually, so I like the pro account. That was my initial reaction. I've kind of been liking the scales lately just because of the how the micro scaling works on them a little bit better. That has changed a little bit. So if you're a micros trader, I still like the scale account.
I get a lot of the scale to stuff. Yeah, the scale.
Oh yeah, tell us more about the scale with the micros, Barbie.
Well, the scale accounts have where you can use more micros. I don't have this pulled up in front of me, but the pro accounts, the position size is limited the same with micros as it is with minis on some of them. And the scale account is a little bit more favorable for micros traders just because of how that works.
Oh, I like that. Yeah, I haven't really traded the scale too much. I've been trading mostly the core. Initially, my favorite was the pro, and lately
I don't even have a scale yet, actually, but I want to get one. That's going to be my next one.
Yes, mine too. I did see a post where it showed like the payout potential with every payout, like it increases on the scale accounts, and I thought that was really interesting. Let me see if I can pull it up. Nick, what's your favorite? Pro?
The pro. Yeah. the pro for sure. I just like, there's really only one rule. Like, don't lose and then get above the buffer or anything above that. You can withdraw. Like, that's just easy to me. So I think it's best. Like, for people who don't know a whole lot about props, it's probably the best one to get into, but it's probably not the most cost. Like, it's probably not the most affordable compared to some of the scale plans or whatever. So that's why I probably recommend the scale, but just for the cost of it. But once you got
I like the value on the scale. That's what I'm always kind of looking at, is the value.
Yeah,
and there's a lot of value on the scale.
Yeah, I was able to pull up a post from MyFundedFutures. We can share my screen if you guys would like, so I can show you why some people like the scale. So here is a scale plan. This is the 50K account. So with each payout request, it increases, which is really cool. And what's cool about the core, the scale, and the pro, all the evals are the same. So the profit target is $3,000 on all of them, regardless of what plan you pick. And news trading is also allowed. Yeah. No daily loss limits. I like this.
The scale plan is kind of the stealth one. I think because I liked the predecessor to the pro plan, that's why I was initially like, oh, this is a cool deal. But then I looked closer at the scale and I like it better than the predecessor to the scale plan.
Mm-hmm. Okay, and Q is trying to really fill that gap. It's only red by about 30 or about 40 points right now.
Have you guys tried out that indicator that MyFundedFutures made?
No, on
here,
TradingView.
Yeah. So it's like this futures P&L levels. I showed it to a student yesterday on a one-on-one call. So basically, if you're trying to get long, let's say you're trying to get long like right here, and you set your profit target price down here. You see right here at the bottom. So up here, let's say you want to, and then stop loss below this low. And you're like, okay, let me just see what three contracts would be. Okay. Okay. Wow. That's a lot. So let me just go down to maybe just one here. Okay. 750. Yeah. That's about my normal risk size. And it shows you your target. And then you can obviously drag these up as well.
That's so cool.
Yeah. So you just drag them up to here and things like that. So yeah, it's called, I showed it to students, called P&L levels by MyFundedFutures. Yeah, definitely go check that out. For people that coming from Forex that don't really know about like $2 per point on NQ, then $5 per point on MES. So yeah, this is pretty cool right here. So definitely recommend.
That's useful anyway, because something that I've tried to explain to new traders a lot is that the range that we're working with every day is different. So that's why I can't say that every single day I'm going to go for $1,500 or whatever it is, because some days we have 20-point ES days, some days we have 100-point ES days. And when you're zoomed in on a 5-minute chart or a 1-minute chart, you don't see that. You just see the relative candles. And so you don't see that one's 3 points today instead of normal 10 points. And so having something on your chart that'll give you an idea of what the value is of these moves is really helpful.
Especially like if we have another, time like we did back in April where we have, like I showed you last week, it was 200-point 1-minute candle. And, like that's just like, you just get into the market around that time. You take one micro, you could lose your account or 2 micros. So yeah, that indicator is pretty good right there. It's pretty easy to use and it's free. So, yeah.
It's giveaway time, the buzz is real. Spin the wheel for a major deal. Oh,
that's a good one.
Let's go. Let us know if you got it. Let's dance. Let's go.
All right, who was paying attention? Who got it?
Who got it? 50 free resets. Use code DUMP50.
There we go. I see. So hopefully we've got some new faces getting it since we did that a little bit different.
Adam got it. Roberto got it. Let's go. Ooh, Davila said, finally got it. Awesome job. Let's go.
Yay.
Thank you. Thank you, MyFundedFutures. Spreading some love to all of our community members. Everyone smash that like button if you like MyFundedFutures. Let's
Double
go.
smash if you like Terry.
Triple smash.
Let's see. Someone asked me, would you take the if we just go higher here, would you long from this 15-minute breaker to previous day high? Oh, yeah, up to here. No, that'd be a good point to long from. I think if you get up here and you get a close above, I think you can get an entry before you get up here. So I think you can get a little bit better risk to reward. But if that does happen, that'd be a good place to long from, because your stop would probably be long. Stop would be like right here. Probably drag this up a little. Yeah, 2-hour trade, if you get above that. So I'll probably try to catch something on a 5-minute just to get a better risk to reward with better stop loss placement and stuff like that. But yeah, no, that's a good target. Previous day high. If we get above this 830, for sure. That would just like prove the theory I was thinking about earlier about how the market's just going crazy before actually reacting to the news a little too much.
KIJ Trade says, I'm off 10 cents from my eval to pass. Congratulations. And the question is, it's hard to get 10 cents. Like, how do I go about that?
You say they're 10 cents away from passing their eval?
Yeah. Congratulations.
I mean,
and they're wondering how to get that 10 cents.
I actually had this question came up yesterday. Someone tried to, they were $18 away. And I just said, let's say like don't lose no more than $50, right? But just take one micro and just try to shoot for 8 points. So that's probably what I would do. Just maybe set a wide stop with one micro so you lose no more than $50 or $25 since you're so close. And then like if that don't work, you just come back tomorrow. But
yeah. And I'm not sure how much the leeway is, but there seems to be like a little bit of grace as far as hitting that 50% exactly for consistency. So like I've passed accounts in 2 days before and it wasn't exactly to the penny 50%. It seems like there is like a tiny bit of leeway. I have no idea how much that is. So don't feel like you have to get it on the dot, I think, just from my experience, my personal experience.
Yeah, no, I'll just give yourself a limit.
Yeah. The worst feeling is when you're so close and then like somehow it just turns to disaster and you just go on tilt and the whole thing is blown. Like that's the worst. Yeah.
I'd be lying if I say that hasn't happened to me before, for sure.
Yeah, it's definitely happened to me. Yeah. Don't do that. It sucks. Maybe like have things planned like for your day to make sure you like step away, because there's always another day to trade. There's always opportunities around the corner. It's so easy to forget that sometimes. Like we start to get tunnel vision.
Yeah, no, it's it goes back to what I've said before is like, people try to make $100,000 a year day trading and they trade like trying to make $100,000 a day, based off their executions.
I think we just get we start foaming at the mouth a little bit when we see the potential that we can do with the futures market. But I've always showed people too. I mean, some of y'all are not going to get this reference, but well, okay. So you can't put a big old ammo in a little tiny gun. Okay, I was going to use calipers and not get too technical, but some of y'all are acting like you've got your little tiny gun, your little tiny prop count, but you're going to put a big bazooka round in there and expect it to go through and work, and it's not going to work. There's no progress going to be made. Nothing's going to happen. You have to be sized right for what you're working with, and you can build that over time. These growth curves in trading is absolutely insane. So you don't have to push to make that today. You just have to push to make something that you can grow on.
So no big bazookas?
Well, if you have a bazooka, don't be putting a bazooka around in your 22, you know?
You have to be smart about it.
I mean, some big things will fit into some small spaces, but that's not how trading works, okay? Some things are tricky, trading is not. These are the orb trades. Somebody was saying I don't share the orb trades enough on the stream. Sometimes there's just other stuff going on. But here are the orb trades for today. It's pretty simple. I just literally take the 15-minute range. You could draw a box around the 15-minute candle and drag it out. I like to make myself not have to do that every day, so I just have a program that does that for me. But it's not a hard strategy. That's the whole point in teaching it, is it's really simple. And I shouldn't have to show this every day because it is so simple. But just to let you all know that it's going. They both the ES and the NASDAQ one hit long.
Let's go.
Yeah, it looks like we are kind of getting that move.
You don't have to see this chart the whole time. You like the levels aren't going to change. The trade isn't going to change. That's the beauty of this and why it's easier to show. Some of these scalps that I do in the morning, like by the time I enter, I'm exited 30 seconds later. By the time you see it, it's already happened. And this is one that's a lot easier to show. So that's part of why I've chosen that one.
No, I get that a lot too when I stream in my Discord. Like if my partner isn't, he's a lot more fun than I am. He's always talking about something when the market, even the market's open. But for me, sometimes like if I don't see much, I'm streaming. Like I'm literally just just chilling here, looking.
Well, I don't share every single trade that I take either. I mean, that's just, especially when we're on a live show, that's kind of hard. But I hope that y'all get some value from the ideas, even if we can't share every single trade on screen. We're still sharing the ideas of the spots that we're looking at and the reaction that we're looking at in the market. So take that, y'all. That's it. There's more value in, in my opinion, there's more value in hearing some key levels in where to engage and then being able to take things that you've learned and deploy your own trades there instead of trying to follow someone else. You have to be able to accept the loss and the risk yourself. And when it's someone else's trade, it's a lot harder to do that. I've been there. I know how you say, I just want to get started. I just want to copy somebody else's trades until I can get going. But the really big focus should always be on listening to the levels that we give and things on the morning, and then you can kind of deploy from there. Because some of this stuff is really fast too. And I'm not going to cut Terry or Nick off when they're giving you gems, and they're not going to cut me off when I'm giving you gems. But here we are. So that one has trailed.
Let's go.
Yes, the NASDAQ one is not trailed yet, but that's okay. I have been, because I even posted in the Discord earlier, I've actually technically been long since 6460 on ES, so I'm just kind of letting some of that play out here too. But I like all that. I love when everything is kind of going in the same direction. We talk a lot about how you get relaxed in your trade and how you feel in your trade and making sure that it's not stressing you out. And none of this stresses me out when all my ideas are in the same direction.
W for Barbie, guys. Let's go. Market is pumping higher. Full gap fill. Nick, what you were saying earlier when we were going over the markets and pre-market, you're like, yeah, bull market, it could just like bad news. It could just like go up.
I kind of see the market just shrugging it off sometimes, which happens.
Yeah, I know. Yeah, I follow like both people on both sides of the spectrum in terms of politics and like the finance people that hate the current administration and the finance people who love the current administration, and the people that hate the current administration were all like, oh my god, the number, the market's gonna be. I'm like, okay, cool, yeah. So you basically tell me buy now.
Yeah.
So let me see. Yeah, if we get above here, I think this would be a good spot to get long from. If you want to wait till 10 o'clock, you can. My only problem was it was such a big move that I wasn't able to get in down. Like I didn't see anything, even on the lower time frames. Like I didn't see even an entry model up here. So my first entry is like right here. Would be like right here at 23,965. But given how the daily is, I think previous day high could be something that we could reach for. But only caveat is this would be a 270 point move up. So maybe wait for the 15-minute to get confirmation. Because the 15-minute, if this, inverses this bearish gap in 5 minutes and closes above, that looks way better than just doing it on the 5-minute. Well, the 5 minutes about to close here in 50 seconds. So yeah, so 10 o'clock is probably going to be when, if I enter, it'll be around that time, because I doubt this 5-minute candle here is going to close above that 965 high at in 30 seconds. So yeah. So yeah, someone said the only reason this move makes sense is there's SMT. Yeah, there is SMT. I marked this off. I didn't mark it off. Well, I did say there was. I just didn't mark it. So this 11 a.m. gap from Tuesday and this 11 a.m. gap, there was SMT here. So that was. Can't believe I didn't mark that off. Did I mark it off on my other chart? No, I did not. So that was a big part, and also too, we had relative equal highs on in Q that I was watching. So yeah, we'll see what happens. Did you guys happen to go see that movie I told you guys to go watch, Weapons, yet?
No, not yet. I'm thinking this weekend.
Okay. Well, okay. Yeah, I'll give you the weekend, right? Because most people have, got stuff to do. Stuff to do during the week. So I get it. Some people have jobs and things like that. So can't just go see a movie at 12 o'clock on a Tuesday like me.
I have a hot tub. That's my problem.
A hot tub in Texas in August?
It always feels good. What do you mean?
Oh, man. I guess it depends what time you dip in there.
Once the sun goes down.
Huh?
Well, anytime really, but once the sun goes down. Or I have umbrellas. I can put the umbrellas up.
Weapons. Yeah, Weapons. It was so good. Nick has a cowboy accent. Really? Well, I am originally from Arkansas, so me and Barbie are kind of neighbors. I think some parts.
I think it's funny that they say you have an accent, but.
How was your golf, Nick? So actually, yesterday I played terrible. It was probably one of the worst rounds I've had, and probably this year. I did not play very good at all. I had a couple birdies, but man, I had the round was just up and down, good parts, bad parts. Holy cow! But just like trading, you have to forget about it. But I cannot lie. If I woke up this morning and be like, the first thing I thought about was, man, that was a horrible round of golf. So I'll be back on it.
It's just like trading. It once you have a bad round, you kind of have to just learn from it and then forget about it and then move forward.
Yeah, I don't think I ever woke up one morning and thought about the bad trade I had the day before like I did the round of golf I had yesterday.
Oh no!
So
it must have been so bad.
That, I could care less about. I mean, I care about trading, obviously, but it's I was. You talked to T or Kane? Yeah, I talked to him a good bit. Let's see. So yeah, I'm gonna wait for the 15-minute to close. See what happens there. And we'll have an hour. It looks like there's not gonna be any hourly gap to the downside. So remember the devil's advocate position I was looking at for shorts. The only thing you have is a 15-minute gap in here to the downside from this low to this high. But let's see how we close in the next 2 minutes. It may be one of those days where just kind of ranges in here. Yo, is the cook in the house today? Who's the cook?
Burke.
You know what I noticed is
Oh,
NASDAQ hit
right.
exactly off of the top of that data candle. Well, I wasn't exactly. It was just like that was kind of the area that knocked NASDAQ down. ES
Mhm.
hasn't made that move yet. So I've been kind of watching this wick right here really went into that swing high right where we had that data drop. Anytime we have a major move, whether it's data or just some random news or just the market marketing, I always take note. I didn't actually mark this, but I take note of where that is, and then I watch it because a lot of times that is where the market will react. So we got that full retracement, and then someone was asking, what was that candle? If you're zoomed way in on the 1 minute chart, that probably looked dramatic.
Yeah.
And I think that was just a technical. We hit that high on NASDAQ.
Yeah, I have this indicator 8:30 and has midnight open. So 8:30, like the news, it always plots out the news from 8:30 just about the open. So if we're below that, both of these midnight and 8:30 heading into 9:30 or right around 10 a.m. and we're bullish and we have a target for previous day high, this is like a good setup for me. But I just haven't seen like the technical aspect of my setup for him yet, unless we get above 23,965, which I don't think we're going to do in the next 15 seconds. So I may be looking for a 5-minute entry at 10:05. So yeah, let me just wrap up while I'm watching. So if you see strong displacement above here, it looks like we're not going to get it at 10 o'clock, but maybe at 10:05 candle comes down and tags here. You could look to get long from here. If this is a very strong candle to the upside, I'd feel really good about having my stop loss below this body. So that's going to be something I'm watching going into from 10 to 11. Yeah, that's really it. I don't think we have news tomorrow, do we? Oh, no, we do. We have 8:30 and 10 o'clock, I believe.
Oh, a consumer sentiment maybe?
Yeah, so tomorrow, yeah.
Or
We
is it
still have
retail
news
sales?
tomorrow. Yeah, we
Retail
have-
sales
Retail
and consumer sentiment. The retail sales, I think, is going to be one of the more interesting. Consumer sentiment's always big too, but retail sales if we have higher prices is going to be interesting.
Yeah, no. So I got a good trade on Tuesday. I didn't catch anything. No, Wednesday or Thursday. So be looking for a move tomorrow to cap off the week. But yeah, I'll see you guys back in here tomorrow for what do we call Friday? We call it what? Freakier Friday now that the new movie's out.
Yeah. Freaky Friday tomorrow or Fantastic Friday, whichever you prefer.
Oh yeah, I like Fantastic Friday too. So yeah, maybe Barbie will bring all of her stress balls. So yeah,
We will
take it easy.
see.
Yeah,
Bye,
take
Nick.
it easy. I'll see y'all tomorrow.
See you tomorrow.
All righty. Well, since Nick has departed, I can update y'all on these orb trades. I'm still technically in this retracement too from all the way down, but that's on a different account.
Mhm.
So the MES orb actually stopped out and then re-entered. So it stopped out at break even and has re-entered. So there's a little update on that one. The NASDAQ one just hasn't really moved anywhere yet. So it didn't quite get the trail. This is the hard thing when you're trading this automatically instead of managing it yourself is
Mhm.
this is kind of an obvious spot and this level's right above it, but that kind of is what it is. So I just let it run. There's the NASDAQ one. This is also kind of interesting because you can see, relative to this move, how the different indexes are going. And NASDAQ has obviously not been as strong since the first 15-minute high was put in, but it also retraced more of that move initially. So just a little bit out of sync, but not totally. We still at least have the right trend. What happens here is then exactly what kind of I was looking at here, where we hit the high on NASDAQ, so the market moved down. Both indexes moved down. This is why I watched both. So we hit this technical high on NASDAQ. Both indexes moved down. ES hasn't hit it yet. Probably when ES hits it, no matter where NASDAQ is, NASDAQ will have a little move down too.
Mhm.
So I don't know how people don't watch both. If you can't put two charts up, you can add a comparison view on most platforms over the top, which is kind of helpful. That's what I have on this chart. It's kind of messy right now, but I've shown y'all this where I have the comparison. You can kind of see the difference. I have to have that bare minimum.
It's so cool how you trade, Barbie, and like with you keep an eye on VIX also, and it seems like you look at the overall context of the markets, right? Like ES, NQ, you kind of have an eye on everything.
Yeah, sorry. I heard a target filled and I was like, what account?
Like where? Which account?
It was the 6480. So I was trailed down here. I'll show you on this chart. I traded this actually pre-market too. We saw this data, or I saw this data candle come down and basically stall around 64.60, and it did go down a little bit, but once we reclaimed the 64.60, since that was the stall point, I bought it, and I had this in I really liked it. I put it in a few accounts, but the runner target, I took a quick scalp on a lot of this, but then the runner target was up here. I talked about this zone earlier, how I was originally looking at the 64.75, but then I had this zone up to 64.80, and I was liking that a little bit better today. So that was my target. So I don't know. I had something around there, just got taken off. There's the NASDAQ orb though. It's not it's not feeling it. The ES one, this is ES orb number 2. The first one got out at break even. So this is the re-entry. This is the hard thing. So there's been a lot of people in my comments going, the orb strategy is so easy to automate, Barbie. You can do that in a couple of hours. Like, yeah, but you can't program all of the re-entry rules. It takes testing and optimizing and all that. I think this is the one. So I've got my little re-entry there that I was happy with today. So I think it's working right.
That's exciting. It's like you're part scientist too. As a trader. Yeah. Barbie the scientist. Tweaking things.
So well, we're always, whenever you have an automated strategy, once you come up with your rules, then it's all about optimizing. So I do have kind of a plan of videos coming out. It's going to be a slow sequence, but guiding through that a little bit.
That's exciting.
So Boba's testing my orb bot. I was trying to figure out a name for it. It became named Orby.
Orby. I like that. Orby sounds so cute.
There's this car I drive by every once in a while. It's kind of far from my house, but when I take this one road, I always drive by this car, and it's an old Volkswagen Beetle, and it's painted white, and it's got the Herbie stripes, and it's got the Herbie 53 on it. I think we were just driving up there, and I was like, "That's it. It's Orby because there's Herbie. Gotta do Orby."
Orby. Honey Dev says I used Orb automated.
Yeah, it's a great little strategy to automate.
Everyone, drop questions for Barbie in chat.
I've also been really tempted by this old slug bug convertible restoration project, and I did promise I was not going to buy a new project until I finish my current one, so it's kind of cramping my style right now, but we'll see. If you guys have questions, go ahead, drop them. How would I act if I had no charts? That would be crazy. But that's the way, I mean, it used to be like you would call in and get your quote, or, you know, they literally had the tape where it prints out and you have to go, you know, find the one you want.
Yes. Like some traders trade, believe it or not, without a chart. Like they just look at the price and that's it.
Oh, my current project is an old F-250 camper special. It's actually at the shop right now. I'm going to go pick it up. I'm supposed to pick it up today. I was supposed to pick it up yesterday, and I'm supposed to pick it up today. Somebody was asking about how far I back tested the orb trade before I felt confident. And this has apparently been a hot topic in some of my comments too. Some people thought that I am an idiot if I haven't gone back 10 years. I didn't really see the point in looking at some of the pre-COVID stuff, because that's the market we're in is a pre-COVID market, and it is a little bit different. So I've prioritized after 2020 or really 2021. And then I got another exit here. Okay. And then I've got, where was I? I just had to exit something. Totally lost my train of thought. Where was I?
I lost my train of thought too. I just saw Magnus is in the house. Hi, Magnus.
Okay, but I think I was like at the 20. So I was looking back at the first like 4 years was kind of a spot, but I can't test the tick entry data, or I could, but I don't have that kind of patience on 4 years worth of data. So I've been focusing on this year. So it's really this year's confidence. And I initially tested the most recent 90 days or 120 days. And now that I've got it automated, I'm testing basically the whole year. And I'll test previous data too, but it's after I've optimized it a little bit, because my strategy doesn't wait for a candle close. And most data that you download, historical data, is going to be 1 minute data. So it's the open, high, low, close of the 1 minute candle. And since I'm entering between open and close of a 1 minute candle, I have to use tick-based data. And so it processes a lot slower because it's every price change. So that's why I don't go back and search for 10 years with that. I'm just optimizing really on this year. But really, I mean, I guess the short answer is 3-4 months gave me the confidence, but it's focusing on what's been happening most recently. And I was thinking about the current events that have gone on. So right now we have a new president. I want to test it's a president that tends to be good for the market. I want to test how we're doing with those conditions specifically, and then move on.
Yeah, that makes a lot of sense. Like what you're saying, you don't want to test like 20 years ago and 15 years ago, because the current conditions are different.
So that's why I focus on the most recent. But yeah, someone will say, yeah, it didn't work in 2002 on September 25th. I don't care. I want it to work moving forward. I think once you get into back testing, you can get so focused on back testing that you forget about what you're actually trying to do, which is test it in the live market going forward in the future. And so that's what's actually more important. And that's when the optimizing comes in, with where I'm moving stops and where I'm placing targets to make sure that my math from my initial back test is holding over time.
This trade is looking good. Hopefully we can book it for a win.
I was just looking at, someone was saying the last 5 years, my initial back tests were really just literally manual. Like I was looking at the chart and I was drawing a box around the first 15 minutes. And then I was looking at how far the market tended to go, just getting some visual. And then I started actually putting the math in there. And that's when I started running it over. I just went back into the charts, in TradingView. Will this show up? Oops. Yeah, so you can kind of see at the bottom where you've got this little calendar. You can just click on this calendar. You can go to any date you want. And so I just went back a few months and picked a random date, and then actually looked at the charts and got a sense of how often the orb can work. Because that's when you actually go look at the history and the old data, you can see, you get a sense for the wicks that come back down inside of the orb range. You get a sense of things like this, like is this common or is this not common? And you can start taking notes like that. That's how I figured out when to trail my stop and things like that. It's just actually going back and looking at the charts. It wasn't an automated thing where I went and back tested everything, because in order to come up with the rules, you have to just actually look at the charts and see what's going on. Then I can start doing the rules and running back tests and things, but it is a process.
It sounds like that process also probably helps to build your confidence in the system too, because like you did it, like, and some things by hand, and just, it's almost like doing your homework and then you show up for the tests and now you're feeling good, versus if you don't do your homework, you show up for the test, you're like, I don't know, maybe it's B or C, I'm not sure.
That really is what it is. I mean, we all have the historical data and the historical charts to go look at. Let's see if this one's not doing as much fun today.
No.
But we all have the access to that data. So might as well use it. I think that's one of the least focused on skills for developing traders is looking left, zooming out and looking left and seeing what's already happened.
And learning from the past. When I'm picturing you like looking back at different dates and looking at wicks, and it's almost like you're trading all those days without, like it's a shortcut, right? Instead of like only trading and not doing any back testing, not looking at historical data. It's like
It is a
you're
shortcut.
shortening. Yeah, it's a shortcut, big shortcut.
I'll tell you, so I have an options spread bot too. It's had a few different versions. Right now we're running the ass bot, but or else its nickname anyway, it's the ass clencher. But the way that I tested that one is like that one I did a little bit backwards because I had a good options back testing software. So I would run the spread in that, but then I would see which days were the worst for it. I would see which days it lost the most money. And then I would go into playback, and I was using, I think Thinkorswim is the easiest playback to use for options like that. And I would put on the spread because in that one you can go to the time. A lot of these option spreads trades are time based. So I could go to that time, put the order in, fast forward the chart till later in the day, and just watch why these things were stopping out and how I could potentially cut down on those big losing days by optimizing the trade a little bit. So that homework, I know it sounds really boring, but we're wondering, what do we do with ourselves when the market's slow and it's not moving and we've got these ideas and the market's not setting up for those ideas? What do we do? Those are the kind of things that I do. I go practice old trades, go optimize old trades. And I think that is a big part of finding confidence in any of the little setups that I'm working on. And okay, so I shared this orb strategy and y'all liked it. I am sharing another one of my strategies, and it's one of my discretionary trade strategies next week. I've told y'all that I kind of have like a playbook. So I'm working on kind of bringing more of my playbook to you. But you'll see what I've been talking about kind of all week, where I have a diversity of strategies. But at the same time, every single one of them has roots in me just going back and looking at the old charts. And if I have an idea, like I wonder what happens if we are at a 3 ATR extension and we get a MACD impulsive move this way or whatever it is, or a stochastic cross, I'll go look at that on the charts and see if it really plays out and what the conditions look like when those win. And that's how I end up creating all of these ideas and strategies that are my own. And I've always found I can go get tips from somebody else's orb strategy and see how they work with what I'm doing. And I love like kind of pulling things from other people's ideas, but really making it my own, because that's where the confidence comes from. It's having it be my own and going back and doing all the tests and practicing it and getting a feel for it, so that when you're in the heat of the moment, you're having to pull on all of this knowledge that you already have. And that's what I'm trying to do during those other times, is build all this knowledge base for these what ifs. So if I'm in the heat of the moment, what if this happens? Do I move my stop or do I not move my stop? And then I already kind of know, because even though this is maybe my first or my fifth time actually trading it live, I've looked at 50 or 100 of examples previously.
Chat, do you guys back test? Type in Y if you do, and if you don't, type in no. And type in Y if you want to.
We're talking about indicators a little bit too. You'll notice I don't use a ton of indicators. If I have an indicator on my screen, it's to show me something that I can't necessarily see just through the candles. I think when we're new, we come to the indicator libraries and we're looking through there like, which one's going to give me the best signal? I just need a signal.
Yeah.
And I don't rely on indicators for signals at all. I rely on market conditions and key areas in the market, key levels, and things like that. I'm never like looking at just an indicator. So like with the Mo roll, I'm watching multiple time frames to see if they're rolling over and going into a buy cycle or a sell cycle, but I don't straight up take a signal from this. I wait and see, are we at support? Does the rollover make sense? because we're at support and things like that. I'm not just clearly taking we had the slow stochastic, which I can't say today for some reason, has crossed, so I'm gonna take a long or a short. That's just not. Once I switched my viewpoint from indicators are signals to indicators are adding information that I'm already looking for, just in a easier to understand way, that changed a lot for me about that. Slochastic. Yeah, I made up a new word today.
Yeah, I think a lot of beginner traders search for that holy grail, that one indicator that is going to give you the signals for 100% win rate. Right? Like searching, oh, is it the MACD? Is it the RSI? Is it is it the VWAP? Like, what is it?
You see that marketed too, like this is the one indicator that'll change your life and make it so you don't have to learn anything else about the market. I don't know about that.
Oh, it's about to hit TPE. Let's go.
Do it.
Let's do it. Do it. Come on,
The
market.
Nasdaq one with a little push will get its trail in. Okay, yay! Win on ES. Oh, we got one.
I love it. Chat. W for Barbie. Let's go.
Buy the Nasdaq.
Bye.
Yeah, banks hate this one trick. Learn how. Yeah. Y'all know the difference between clickbait and not. It's the same with the indicators and everything else. Be smart. If it's like a secret on the internet, it's not a secret, for one thing.
Oh gosh, yes, be smart, you guys. Some of the things I've seen, I'm like, really? Just got to be smart. Like I've seen, people say, "Oh, I'm trading $100 million cash account." It's like, you guys, no. and then they're asking for donations. It's like, oh, you guys, yeah, we have to try and be smart. Definitely.
You know what I've been seeing lately is like, I need some more affiliate links. I need more affiliates.
Oh,
instead of quality over quantity. That's a red flag too.
Mm-hmm. And this trade looks like it wants to win too. Let's go. Come on, market.
That's what I was telling chat. Call your friends, tell them to buy NASDAQ for me real quick. Just need a little pump.
Karan said, if I had 100 million, I would not even look at trading. Yes, I agree. Same. Although maybe it would be like a hobby.
I was about to say I would be all over the market, making that 100 million into $1 billion.
Ooh.
That's the thing about when you start getting into this upper level of money. I think a lot of people don't understand this, because I see this like, how could you possibly be making that much money? And I'm not even just talking about me. I'm talking about like mega billionaires and things. They're not working for hourly, and they're not working even for a regular salary where it's like per month. They're leveraging something that they have, which is probably a special skill or special knowledge. So it's at a point, you're not exchanging time for money. You're leveraging something that you have of value, either a skill or a knowledge, for wealth. And it's not an exchange of time for money anymore. And once you kind of get into this, I know a lot of like mega wealthy people. So I'm trying to, this is like rich dad, poor dad stuff for you here. Once you kind of get into that mindset where it's not like you're trying to get money to pay your electrical bill, it kind of becomes a scorecard. So when you've got somebody with $100 million, they're not saying, oh, I've got $100 million, everything's taken care of, because everything's already taken care of. All of a sudden it's, can I get my score from 100 million to 200 million to 500 million? And it's not even about the money anymore. It's all about that score.
That why, like that purpose in life, because you still have to have a purpose and that score of winning. Like,
yeah. And people who have something of really high value that they can leverage and, change something in the world, create a product or an idea that changes the world. That's not the kind of person who's just going to sit down at the end of the day as like, whew, job done. They're going to keep doing things, because that's just the nature of the beast. That's why some people, no matter, you can take everything away from them and they'll come back and be at the top of some other game. It's just the way it works.
It's that ambition and drive. Yeah. To get to that 100 million or however many millions, that internal drive, it sounds like it doesn't go away for people. It has to be transferred to something else.
Yeah, I mean, that's why you see like mega rich people still working and still doing things, because nobody that has the drive to make $100 million actually wants to sit around in their underwear and play video games all day. They might do that some, but they're going to have energy where they want to do more.
Right. Because that probably gets boring if you're used to, building things and offering services and helping a lot of people. There was a CEO, was it of Goldman? Oh, I'll have to look it up. There was a CEO of a major company, and he retired, and they asked him, so what are you going to do next? And he said, I'm going to become a professional poker player, because he loved to play poker, and like he hardcore was like, I want to be like the best poker player. I thought that was so cool. And then there's someone else that's also a DJ. Do you guys know who that is? Chat, do you know who I'm talking about? Like he literally is the CEO, and then he DJs on the side. I thought that was so cool too.
I saw someone say like, if I had $1 million, you'd never see me again. I don't know about where you live. Where you live, $1 million might not even be enough or that much anymore. So that's kind of part of it too. Is like once you have $1 million, you realize that's you can keep going and you can do a lot more. I mean, there's always something bigger to achieve, and that's if you have a driven person, they're always going to be driven.
Mm-hmm. Voltron says million is nothing. Yeah, with inflation.
Around here, I mean, in Austin, I wouldn't be surprised if the average house is getting close to $1 million.
Yeah. Let's see. Raphael says, go to Thailand, you'll be good. Yeah, Ethan said 1 million doesn't get far here.
So it's all relative too, but like at a point, once your needs are kind of met, then it all becomes about a score. That's where I want to be. So
yeah, it is so important to have that purpose in life. To have like life lessons with Terry and Barbie this morning, guys. Yeah, so to have that purpose is what gives us drive. It gives us that reason to wake up every single morning. And I think as adults, like we have to figure out what that purpose is. And everyone, we're all on our unique journeys, and you do have to figure out like, oh, okay, my purpose is XYZ. This is what's meaningful to me, and this is what gets me up every day. I think to use external things like, oh, I have to get up for my job, I have to do this, it kind of takes the joy away from life. Like, but if you can find that greater purpose of like, okay, my purpose is to improve every day, my purpose is to help others every day, it makes it feel so much more meaningful and exciting and special, right? Like versus an external reason like, ooh, I have to go do this. Like, no. I want to wake up every day. I want to love life. I want to feel like, oh, this is so special. I get to live another day. Like, it's a gift. What am I going to do with today? Coming out of that mindset feels so much better to me than like, ooh, I have to go do these things. Like, it sucks. Oh, I can't. Oh, Barbie, I think you're muted. You're muted, Barbie.
I see all these people talking about how much $1 million is. I think if you had $1 million, you would go for more. I really do believe that. Everyone's like, I just need $1 million. I used to think that too. Now I want 10, like.
Yeah.
If you have the drive to earn your first million, it's not going to be your last. Plus, I mean, the cost of living is going up all the time. So, I mean, I've seen this in my lifetime. I mean, I live in one of the biggest booming areas of the country, but we've gone from, I mean, one of the very first houses I sold in Austin was $150,000. So think about that, $150,000 for a nice family home in Austin, Texas. So, a long time ago, $1 million would have been just fine, but that's not, I mean, that's in my lifetime. That's in my career time that we've gone from $150,000 house to close to $1 million. And you still have to think about retirement and all these things that I guarantee you, see $1 million, you'll want more.
Mm-hmm. Yeah.
I'm
And
not saying it's nothing. I'm saying you're not going to
Right.
stop.
Yes. Yeah. Money doesn't buy happiness. I think a lot of people think once they reach a certain amount, like, oh, my life is going to be so great once I hit, once I'm making, however much a year, or once my bank account shows XYZ. But I think a lot of people, once you get there, it's like, okay, you kind
If
of look
you're earning,
around.
if you're working with like a $50,000 a year salary now, and then all of a sudden you have $1 million, I don't believe you that you're going to still live like your $50,000 salary. That's a very rare person that actually does that. You want to go treat yourself. You want to go have a nicer house or a nicer car. Guess what? Those cost more money to maintain. I have a big house. I have a big property. Y'all do not want to see what it costs to maintain this place. It would make a lot of y'all cry. Like anyone saying that $1 million is a lot, it would make you cry. And that's kind of how it is. Like you level up and everything gets bigger. That's why they say like you have more problems the more money you have sometimes.
Yeah.
It's just different problems.
I think I've heard people refer to it as lifestyle creep.
Yeah.
The more money you make, the more you can spend, and your lifestyle keeps leveling up, but it's also becomes more and more expensive.
Yeah.
Barbie,
Bill only wants $100. I can help you with that.
Barbie, last minute thoughts before we head out for the day?
Yeah, I'm going to take this suggestion from Mr. Smith and dry my tears with Benjamins.
I love that. I can picture it in the Kleenex boxes, Benjamins.
Well, I got the main move that I wanted, which was on ES getting 6460 to 6480. So the main part of my day is done. I was really looking for this retracement, whether you're on, is this the NASDAQ one? Yes, it's NASDAQ. So basically we've retraced that whole data move on NASDAQ, and we've nearly done it on ES as well. I think it's really important to, when you see a bad data number, not assume what the market's going to do. That's exactly what we saw today. We had a nasty data number and the market marketed the way it wanted to go. So just keep that in mind. Don't get too stuck in your biases. And once your plan is wrapped up, you go enjoy life. Go enjoy your $1 million.
Let's go. Thank you, Barbie. Let's welcome Ash to the show. We will see you tomorrow, bright and early.
Alrighty.
Bye, Barbie. Hey, Ash. How you doing? Can you hear me?
Sorry, the mic was muted. Hey, good morning.
Good morning. How are you?
I'm doing good. How are you doing today?
Good. Yes, I am going to head out. I have to quick catch a flight. So I will pass the baton to you, and I will see you tomorrow.
Safe travels. Have a nice
Thank
day.
you. Thank you. Bye, guys. See you tomorrow.
Hey, good morning, everyone. Welcome back to another segment with myself, Ash Trades. What's up? How's everybody doing today? How's everybody's day going so far? Good morning, Zyro. Good morning, NoSecu. Good morning, SB, MFTV. Good morning, Lucas. Good morning, Albert. Good morning, Victor. Good morning, Anubis. Good morning, Mike. Foxtoon, good morning. Pigeon, good morning. Internet Explorer, what's up? How are you doing today? Thiago, good morning. George, good morning. LG, good morning. Raphael, good morning. Godwin, good morning. Tom, good morning. Gustavo, what's up? HMH, very good to see you again. How's your day going? Pratt, good morning. Hello, hello, hello. How's everybody's week going so far? Let's see how chat is doing. Throw a 1 in the chat if you're green on the day. Throw a 2 in the chat if you're red on the day. Throw a 3 in chat if you've yet to trade today. How's everybody's day going so far? Morning lumberjack Ash. Yeah, I guess I do like my flannels. I have a bunch of them. Maybe that makes me look like a lumberjack. I do like my trucks as well, so that probably fits the image, but I've never chopped down a tree, so I think trees deserve their own place in this world as well. Grow the mullet. Yeah, it's time to get that man bun back. No more skin fades. Chat has convinced me that it's time for a mullet, man bun, whatever you want to call it. It's time to grow it out. Good morning, good morning, good morning, or good day, depending on where you're from. Hope everybody's week is going well. Hope everybody's day is going well. Let's take a look at today's price action, and then we'll get into a conversation. Huge drop there on the news. In my opinion, it makes complete sense. Let's review it real quick. For anybody that's been working with me, they understand that we've spoke about consolidation profiles before. This morning was one of those consolidation profiles. It's very clear. Price is only ever doing a few things, right? You could either be moving up, down, or sideways. Very clear. This morning, it was moving sideways, right? Overnight, it was moving sideways. This morning, it was moving sideways. So in terms of analyzing consolidation, there's no secret to it, right? Price was moving sideways. You don't have to make it any more complicated than that. But once you can identify consolidation, then that's when we understand how to operate. If you've been working with me here on the channel, you would know that in a consolidation profile, the best opportunities present themselves at the extremes of the range, right? So if we were to point out the extremes of the range, you'd be looking at the swing high and the swing low of the range. And let's take a look. In a consolidation profile, the best opportunities present themselves at the extremes of the range. So you have to wait for one of the extremes to get engaged. So there's two opportunities here. We're going to analyze both of them. We went over these with my community earlier this morning. So if you're here from my community, it's going to be a little repetitive, but everybody here on MyFunded TV needs to see it as well. So after obtaining an idea, after obtaining a game plan, what is the thing that tells you it's time to engage with that plan? Same concepts, different day. It's always going to remain the same because this is how I engage with the market, right? Develop a game plan, then look for a confirmation to that idea. The confirmation I use is a Kraken correlation, right? So SMT. Let's take a look at the different forms of SMT this morning, right? We've already identified that it was a consolidation profile. When we're dealing with a consolidation profile, we know to look at the extremes of the range. So let's hop over to NQ as well so that we can analyze SMT. Let's point out the range, okay? Here's the swing high of the range. Here's the swing low of the range. And what do you see here? Can you notice how during the news release, the candle right before the news release took out the extreme of the range, right? Take a look at this. Take a look at this candle. Hold on. That's the news candle. One more. Hold on. Take a look at this, right? What do you see here? It's very clear that NQ took out the swing high right before the news release. It's very clear that ES did not take out the swing high. What is that? That is bearish SMT. We already know that we're dealing with a consolidation profile. So since the extreme of the range was engaged on NQ, right, we would know it's time to start looking for a position. The thing that confirms that idea is SMT. You can see that there's bearish SMT at the highs because ES did not take out the high, while NQ did take out the high. So now you have a confirmation to the idea, and the idea is a consolidation profile. So at this very moment in time, seeing that bearish SMT, you can suggest that we're going to go back to equilibrium of the range. Well, it happened right there at the news release. So once again, it's the same logic day in and day out. You're developing a game plan. Once you develop a game plan, you look for a confirmation to that idea, that confirmation is a Kraken correlation. Once you get that Kraken correlation, that is the thing that states it's time to engage, and look at the results that you would have gotten, right? Insane move lower there. That's from the news, right? We had a news release. So you do also need to understand if the account that you're using is allowed to trade the news, right? Because there's accounts where news trading is not allowed. So please do your due diligence. Make sure you read all of the rules before attempting any trades, right? Go on to MyFundedFutures website, go to their FAQ section. If you have any questions about any of the accounts, type the question into that FAQ. You'll get the answer right then and there. Okay, so whether you are allowed to trade news or not, it depends on the account that you're in. If you are allowed to trade the news, it's the same thing every day, right? You develop a game plan. After developing a game plan, you then look for a confirmation. Once you get the confirmation, that's when you go to execute. Now, let's keep moving forward, right? Again, we know it's a consolidation profile, right? The lows of the range were taken out. Okay. So when we're dealing with a consolidation profile, we look for a move from the extreme of the range back to equilibrium of the range. What would we use to engage with that idea? SMT, right? So let's go out to a higher time frame. Once again, is there SMT? Yes, there is, right? So take a look at this. Notice how NQ tapped into a bullish FEG here, right? A location, a higher time frame level to execute long positions. Bullish FEGs. When price tapped into the bullish FEG, you can see that NQ was capable of going into the bullish FEG, right? So that means that it took out this candle low. Let's go over to ES. Let's analyze the same 2 points in time. You can see that ES made a higher low, right? It did not tap into the bullish FEG. It did not go below the 1200 hourly candle. There you go. You got another confirmation to your idea, it being a Kraken correlation. So that would tell you it's time to engage with the idea of a consolidation profile and look for a move back internal. Excuse me, not internal. A move back to equilibrium of the range. So then it's just a matter of getting down to a lower time frame and looking for some form of entry. And not very clean here on the 5 minute. Not very clean here on the 1 minute either. So definitely a tough position to get into. But you can see an inversion in here, right? If you're on the 1 minute time frame, you have a inversion here that it reacts beautifully to. So in the form of change in the state of delivery, there's 3 different types of change in the state of delivery. You can get, right, a order block, which is a change in the state of delivery. You can get an inversion, which is what I'm pointing to right now, or you can get a breaker block. So, point being, develop a game plan. After understanding your game plan, look for a Kraken correlation to confirm that you should engage with the market. After confirming it's time to engage with the market, then look for a change in the state of delivery, aligning with all of that information. Right? So for anybody that trades inversions, what a beautiful trade here. Both ES and NQ beautifully moved higher from the inversion, right? More than 2R at this point. Going back to the news candle high. Beautiful trade here. Both NQ and ES, right? If you want to point out the inversion that occurred. Beautiful trade. After the SMT, entering at the inversion, putting it at the low, aiming for 2R. The overall objective, in my opinion, would have been the news candle high. that has occurred. Amazing job. Amazing reversal there. So this begs that question, right? Everybody always says, you know, why are you going to live stream if you're not going to take a trade? That's because there's not always a trade available, right? Here's an example of 2 long positions and 2 short positions that I just analyzed for you that occurred before my segment, right? So I can't force price to do what I want it to do. I have to analyze it objectively, okay? When there's a trade available, I'll take it. If there is no trade available, I'm not going to take it, right? So I'm not currently in any positions. The longs played out beautifully. We shall see what we get from here. After analyzing the opening price, after taking a look at these few trades, we still need to understand how to move forward. So the next thing that I'm looking at is whether this is going to be a change in the state of delivery on a higher time frame. Right? If they now close above here, this could be a 15-minute change in the state of delivery. This also explains why I'm looking at this, right? Are they going to create SMT here, or are they going to create a change in the state of delivery? That information right there is going to help me analyze how we move forward from here. All right, so let's wait and see. Let's see if this becomes bearish SMT or if they can go and close above it and create a bullish change in the state of delivery. So moving forward, now to prepare for the rest of the day, the rest of the session, this is what I'm looking at. If we can get candle closure above here, then I would look for price to go to previous day high, right? So let's see if ES can also close above here. That will be very telling. If ES can also close above here, then I'll look for NQ to go to previous day high. All right. So that's what I'm looking at for my session. Previous day high. So that was this morning's trade. That was this morning. That was this morning's New York Open. Now for the rest of the session, we're seeing if this change in the state of delivery will send us to previous day high, which would also be another new all-time high. So I'm going to hop over to chat. If you are finding any value in that information, feel free to throw it in chat. Let me know if you have any questions, if the information is helping, if there's any information that you'd like to go over, along with hit the sub button, hit the like button. We're doing many, many giveaways here. We have many hosts. We have many guests. We're trying to provide as much value as we can. So if you're getting any value from it, hit that sub button. Let me know if you have any questions or information you'd like to go over. Feel free to throw any type of question regarding this trading business into chat, and we can do that now. For the individuals looking for a signal service, I spoke about this earlier in the week. I'm not obligated to take a trade on here. I'm not going to force myself to take a trade on here. Okay? This is not a signal service. Okay? I do not need to be in a position every single session, every single day. All right? If you're looking for a signal service, this is not that. So I'm not going to force myself into trades. It doesn't matter what chat is saying. I'm not going to force myself into a trade. If you want to look at some of my results, I provide my results on my Twitter page all of the time. Okay? I'm currently in a live account because of my performance, and that live account has seen many withdrawals. Just go through the Twitter feed. You can see it there. I am an actual trader. I do trade the market. Ash, what do you think about the 15-minute unicorn on NQ? That is currently what I'm pointing at. That is exactly what we just went over. I'm looking at this area to provide support for a move to new all-time highs. That's how I feel about the 15-minute currently. That is exactly the information we just went over. What is my Twitter? My Twitter's right here. Okay, this is my social media for all social medias. Twitter, Discord, YouTube, Instagram. Because now we see a lot of analysts and not traders. Yeah, it's pretty simple. Just do some due diligence, right? You could go to my Twitter feed and see all of the withdrawals I've made from trading, right? You can't get a payout certificate if you have not traded in an account, right? There's a difference from traders and marketers, okay? Go and ask a marketer if they're capable of providing some withdrawal certificates. The people that refuse to do that or cannot do that, those are individuals that are not traders. Those are marketers, all right? There's a difference. You can see the traders because they have no issue providing their results. So just go and look at the Twitter feed. All the information shown there. If you're making money, how come it hasn't hit my account? Yeah, I'll switch the withdrawal method so that it could go directly to your bank account instead of mine. My bad. I forgot. I put the wrong information in there. Ash, how long you've been trading? I've been trading for close to a decade now. I have no problem saying this either. It took me a while to become profitable. Just a quick recap of my experience. My first year was pure luck. That whole beginner's luck thing, I do think that's a real thing. My first year, I hit a couple good options trades. That provided a couple thousand in returns. I then took my wife on a vacation. Come to find out that year 2 and 3 were god awful. I couldn't find a system. I couldn't find profitability. I was just going from strategy to strategy to strategy, over leveraging, oversizing, burning accounts, the whole nine. It was very hard during year 2 and year 3, but that shaped me to where I am now. The whole trial by fire thing is what showed me that strategy hopping is one of the worst things for you. That showed me that patience is truly a virtue. You're not going to get the results that you think you should be receiving instantaneously. You're going to have to go through a lot of work, a lot of time, a lot of studying, a lot of ups, a lot of downs, the whole nine, right? The person that continues to get up and keep trying is going to be the individual that actually makes progress in this business. So it wasn't until about year 4 that I actually found a system. I found profitability. My withdrawals were then larger than my expenses. It took me a while, and I have no problem saying that because that's what trading is. You will come across losses. You will come across ups and downs. There's nothing easy about this business. So if anybody says otherwise, then I would love to have a conversation with them because this is one of the hardest businesses there is to run. You can Photoshop broker statements. You can Photoshop payout certificates. All right. So, would you like the back end of MyFundedFutures to confirm these withdrawals? We could just ask them to see if it's real, right? I'm not Photoshopping my payout certificates. That's ridiculous. I don't have time for that. Go ahead and fact check me if you want to go ask somebody on the back end of MyFundedFutures if any of those payouts are real. If you need credibility, go ahead. I have no problem. Right. Just ask them for credibility. Go ask somebody on the back end if any of those are real or not. Plain and simple. Slow is smooth. Smooth is fast. I fully agree with that. You're going to go through ups. You're going to go through downs. You got to be able to get up and try again no matter the result. You got to be able to get up again and try again no matter the result every single day. It's hard to deal with delayed gratification because, we're all humans. I understand that we weren't taught this way. Okay, so you're going to You're going to have to fail forward, right? This isn't like middle school. This isn't high school. This isn't college, where you only move forward in your education if you get the test correct. That's not what this is, right? For some reason in school, you had to pass the test to move forward. That's not what this is, though. That's not what this is. You have to fail forward to gain those experiences. Yeah. How do I stop myself from blowing up accounts after getting a payout? We spoke about that as well. We spoke about that yesterday. You have two options here. When you become available for a payout, you have two options. Either take the full payout and understand that you're going to have to end up buying another eval because you're leaving yourself no drawdown to use after that payout. Okay. Understand and accept the fact that you will have to get another eval if that's the choice that you make. Or choose to leave some drawdown after that payout so you can continue to keep trading. Okay, so that would be my answer, is leave a buffer so that you can continue to keep trading after the payout. And then also on top of that, you also have to have the mental and emotional intelligence to remain patient, right? If you get overconfident just because you made a payout and then you go in oversizing and over trading, you're going to blow the account, right? So you're going to have patience. You're going to have emotional and mental control, right? You're going to have to stay away from overconfidence and focus on the process. Be so focused on the process that you don't even care about the results, right? Be process driven. Allow the results to be a byproduct of it. Do not let overconfidence come in and change the way that you're trading. All right, so that's how I would say how to deal with blowing accounts after the payout. Very good question. Let's continue to keep going through some questions and answers. As of right now for the chart, this is what I'm looking at. Let's see if ES, okay, so this is not bearish SMT, right? Because ES also went above this high. So for that reason, we'll look to see if this area could provide support for higher prices. Something like this. And then we'll see if we can make a move to previous day high. Are you looking to trade shorts? I don't know how else to be more clear than this. The arrow is pointing upwards. I told you I'm looking at previous day high as the target. I don't know how else to say it, but I'm looking for this area to provide support for higher prices. So no, I'm not willing to trade shorts. That is not the idea currently. We are getting rejected at 2,400. Yeah, sure. We'll see. I mean, that at the current moment, yeah, it's moving down. We'll see if this area could provide support for higher prices. Bigger arrow. Okay, let's get how about this one? We'll go like this. How about more arrows too? Does more arrows also help? We'll get hold on, let's get some. Let's see. One of these. Get one of these. Path. All right, let's see if that helps. Oh, the rocket. Yeah. How can I leave the rocket out? Where's the rocket at? Turtle? No, we don't need a turtle. Where's the rocket at? Does anybody know where rocket. Where are we at here? Where is the rocket? I can't find it. It's got to be right in here, right? It's got to be. Plane? Is plane better than rocket? Rocket Scooter. Yeah, Matt is amazing. He's such a valuable individual. I really appreciate all of his work, both in this community and on social medias. He's a phenomenal individual. So let's do a poll. Who is looking for shorts? Who is looking for longs? Do you think we'll make a do you think we'll make a move to the previous day high? Or will I be completely wrong and all of these longs will get stopped out? What do you think? Are we going to find this area of support, right? Will this act as support right in here? Or am I completely wrong and the bears have taken control? We're going to go right through it and stop out all of those long ideas. What do you think? What do you think, chat? Will we make a move to previous day high? Yes or no? What do you think? All-time high. Can the poll say Ash is completely wrong? Yeah, I'm completely wrong today. So we'll see if price can confirm the idea that I am wrong. Let's take a look. We shall see. Ash, I'm not looking at anything. I made 1,500 on a 50K eval, 4.5K on a 150K eval, and 2.7K on another. Amazing job. Absolutely amazing job, Peter. Yeah, if you're deep in the green today, you should be done. You should be done for the day. Amazing job. Very good job. W in chat for Peter. Ash, what are your thoughts on Logan Paul? I mean, maybe excuse my ignorance, but who is that? I don't even know if I know who you're talking about. I assume Peter is photoshopping messages. You guys are just relentless, man. You know that good. Then maybe that's a good thing. Don't believe anything you see on the internet and just do your own due diligence. That works too. I do highly suggest you do your own due diligence. That'll help a lot more than just believing anything you see. Dance on the piano. I don't know if the piano can hold my weight. That virtual piano in the back might just collapse right underneath me. Why does every time I get a new account, I always lose 1K or a lot on the first trade? Then after I win so much, like 1 or 1.5K, but since then I lost that much before. I just don't want to take profit. Why do you not want to take profit? We need to know the inner reason why you're deciding not to take profit, right? Is it because you're trying to hit a goal within one day instead of taking what the market is giving you, right? Like, are you forcing yourself upon the market, right? Like, are you saying, to pass this funded account, I need 3K of profit. So since I only have 1.5K of profit, I need to reach for more. What is it? Because that thing, that thought process, that mental or emotional control is the reason why it's happening, right? Price can and will do whatever it wants whenever it wants to. So it's not price's fault. It's the logic you're providing to your decision making, right? Are you falling into impulses? Are you falling into intrusive thoughts? What is it? What is it? Right? Because the market doesn't care about how you feel. The market doesn't care about what you think. You have to be objective to the information. Take what the market gives you, okay? And be objective to that. Do not force a certain goal. Do not force a certain timeline. Do not fall into your emotions. Be objective to the information. You guys are doing great today. Ash, what are your thoughts on Ash? I don't know. He is a hindsight trader that provides hindsight payouts who never takes any trades. That's what I think about Ash. Nothing worse than taking a trade that isn't your setup, the market giving your setup after the loss and not being able to take it. Yeah, you have to understand that it's a simple choice, right? So you have to decide whether you are only going to follow one model, or right, do you want to trade discretionarily? Right, you'll get in when you want to, you'll get out when you want to. It's not a matter of a model; it's a matter of a thought or a feeling. But what I'm trying to say is you should probably determine that before you take trades. Okay? Because it helps in terms of mental and emotional aspect, right? If you understand how you're going to operate, then you can operate more efficiently within the market. So, for example, if you're going to be the individual that decides to only trade his model, right? When your model doesn't appear, then there's clarity in knowing that there's no trade to take. Right? There's really no emotion behind that. Right? You know that there's no trade to take because you only follow one model. Right? So there's clarity and simplicity. You should answer these questions before you get into the market so that during the time of, you're not, lost in decision making. You don't have to go back and forth in terms of your thoughts. You already know what you're doing. It's just a matter of executing it. Okay. So make those decisions beforehand. It'll provide a lot of clarity. And on top of that statement, there's clarity and simplicity. So what I'm trying to say is make less decisions, right? So for example, if you had a checklist of 20 different things that need to be checked off before you get into a position, you're barely going to have any trades. You're barely going to have any trades because the individual that has a checklist of only one thing, right, they're going to have a lot more trades than the individual that has a checklist of 20 things. So what I'm saying is simplicity brings clarity. Just use one or two concepts and move forward with them. Don't try to outsmart the market. Don't look for the holy grail, the secret sauce. There is no secret sauce. Okay. You do not need 90 different things to get into a position. You just need one or two. The only holy grail there is risk management. So once you can understand that implementing your risk management is more important than finding a holy grail, you'll start to make progress in this business. Ash is an AI. I remember him saying this in the same message before. Yeah, just type me into ChatGPT. You'll find my processing systems there. Do me a favor while you're at it. Can you update my systems? I'm a little out of date because I just keep repeating the same things day to day. Ash GBT. Ash AI signal service. No, lots of sarcasm today, chat. I'm sorry. I know I'm very business oriented every other day, but I do have to, we have to have some fun with this business as well. We can't just, if we just burn out on being overly, strict every single day, there's going to become a point where, you burn out and do something you shouldn't. So we do have to loosen up sometimes too. We do also have to have some fun. So I'm sorry if any of my sarcasm today is confusing anybody, but there are some jokes from me today. That's why we have airplanes on the screen for once. It's fun and games until somebody blows an account. Well, I mean, if you follow my information, you'll definitely blow an account. So don't look at the screen because we're going much lower here. I'm just kidding. Once again, I'm just kidding. So, any questions? Any information? I know we're having a little more fun today, but if you have any questions, if you do want to go over any information regarding this business, feel free to throw it in chat. We can go over it. On the real though, Ash, I've been watching you every day. I'm at 3 payouts in 10 days. W in chat for Pocket trades. Let's go, Pocket. Congratulations on the payouts. Phenomenal job. Clearly the time, the effort, the attention that you're putting into your business is literally paying off. W in chat for Pocket trades. Very, very good job. Very good job. Ash, where can we find your course? That is right here. Right here. Okay. I do have a course on my model. It goes over my entire model along with the logic that I provide to my decision making. Can you explain the unicorn setup quickly? Yeah, so the unicorn is just simply a breaker block plus an FEG. Okay, so here's a long setup right here. Let's get rid of this arrow. Here's a long setup right here. The breaker block will always be found in between these two swing points, and I want to see an FEG aligned with it. So just in the most simplest terms, it is just a breaker block plus an FEG. Okay, so this is what I look for during New York Open. Okay. Now, to add to that, right, I don't want to have a huge checklist. I just want one or two things to go with this to understand what I'm doing. That is SMT, right? So I look for this during New York Open, and when I'm looking for this, I want to see a higher time frame SMT supporting this idea. Okay? So just take a quick screenshot of this, and now we're going to also do this in price action because we need to read the candlesticks as well, right? This is a long position. Okay? I enter at the beginning of the breaker with a stop at the low, aiming for 2R. Okay? Breaker block plus FEG at New York Open with SMT supporting the idea. That's what I'm doing day to day. Entering at the beginning of the breaker, stop at the low. All right, so take a screenshot of that first, and then we'll show real-time examples, right? All right, you got some time to do that. Now let's go over to price action. All right, ready? Here we go. Take a look at this. Where did I just go? What just happened there? All right. Hold on. I lost my spot. Give me a second. All right, let's take a look. How did I lose my spot? Give me a second here. Where's Monday? Right here. Or was it? Oh, it was Tuesday. That's why I messed up. All right, let's take a look. Same exact thing that I just stated. Ready? 15-minute chart. Bullish FEG, right? This is a higher time frame level to be looking for long positions. Notice the time. Right? Once again, it's going to sound repetitive because it's the same exact thing over and over and over again. at New York Open, look for the unicorn model that has SMT supporting the idea. All right, let's take a look. This is 9:30, so New York Open. At New York Open, ES does not take out the CPI candle low. At New York Open, NQ does take out the CPI candle low. There is your bullish SMT that I referred to. There is the time that I referred to, New York Open. Now, we understand that during SMT, you want to long the stronger pair, short the weaker pair. So this example right here shows that ES is the stronger pair because NQ took out the low. Since NQ took out the low, ES did not take out the low. ES is the stronger pair. All right, so then we go into New York Open looking for a bullish breaker with an FEG, and you can see it right here. Swing low, swing high, new low, new high. This would be your bullish breaker. You need to have an FEG aligning with it to make it a unicorn, right? Here's your FEG right here. And like I said, you enter at the beginning of the breaker, stop at the low, aiming for 2R. Right? Who remembers the Tuesday morning live stream? Who remembers the long position that we pointed out Tuesday morning? Well, here it is. Here's the model that I'm talking about. You have New York Open, you have bullish SMT, you have a bullish unicorn. All right, so this would be a long entry. All right, let's just go ahead. This is replay mode. Understand that this is replay mode, okay? This is not a live trade. This is replay mode. Somebody asked me what my model is. I'm showing you what my model is. That's why I can't show you currently because my model is not currently on the screen. So we went back to replay mode. Okay? Understand that this is replay mode. But this would be a long position right here. Stop at the low. TP at 2R. See what happens. And there you have it. Now, this begs a lot of questions. This begs a lot of questions. All right. First question I have for you is, do you have the patience to hold this thing to target? Let's take a look. This is 10 o'clock. This is 12:55. Honestly, chat, throw it in there. Throw it in chat if you truly think that you have enough patience to hold a position for more than 2 hours. Yes or no? Or during all of these price fluctuations, right? So for example, right here, right? The beginning of the position goes really well because after the entry, you go right into profit. But the moment you go into profit, are you going to be the individual that raises your stop loss into somewhere above break even because you don't want to allow this thing to become red again? Right? Are you going to be the individual to get stopped out here right near break even? Or are you going to be the individual to be able to control your emotions, control your thoughts, control your actions to allow all of this to occur? Honestly, yes or no? Can you hold a position for more than 2 hours? Or are you going to allow your emotions to deter you from that? Why did you long ES in this example and not NQ? Go ahead, chat, throw it in there before I just hand it out. Why are we looking at ES in this example and not NQ? Very good job, chat. Very good job. Bullish SMT. You long the stronger pair, you short the weaker pair. So in the beginning of this example, let's go back. We pointed to this right here. right? So SMT is when two correlated assets are doing something different at the same point in time. Right? So take a look at this right here. ES did not take out the CPI candle low. NQ did take out the CPI candle low. This shows bullish SMT. This shows that ES is the stronger pair. You long the stronger pair, you short the weaker pair. So let's just do a quick example of that. Okay. Bullish SMT is when you're analyzing the lows. The stronger pair would be the pair that creates the failure swing. So this one is the stronger pair. Right? So long the stronger pair, short the weaker pair. All right. Now let's look at bearish SMT. When you're analyzing bearish SMT, you're analyzing the highs, and it's used the same exact way. When two correlated assets do something different at the same time, the asset that creates the failure swing is the weaker pair. So you want to long the stronger pair, short the weaker pair. All right. So that would be why I chose ES in that example versus NQ. All right. Very good question. You size your stop for volatility. In my opinion, the market determines the entry. The market determines the stop. Okay. So what I'm trying to say is my entry function is a breaker block plus an FEG. I look to enter at the beginning of the breaker. Right here. I enter at the beginning of the breaker. I put the stop at the low. When I say the market determines the entry, the market determines the stop, what I'm trying to say is sometimes you'll have this much risk, right? Sometimes the breaker will be really small, right? So look at the difference of this risk, 20 points versus 8 points. You don't get to determine that. The market does. Sometimes when the market has more volatility, you'll have larger risk. Sometimes it'll look like this. But what didn't change is that you're entering at the beginning of the breaker and the stop is at the low. So the market determines the entry. The market determines the stop. What you do as a risk manager is you determine your size, right? Because obviously, one contract at 22 points on ES is a lot more risk than one contract at 7 points of ES. You see the difference there? So you change your size, right? So do the calculation beforehand to make sure you're sizing appropriately. And it's very simple, right? We have ES here, right? And if 22 points is too much of risk for one contract of ES, right? Just go down to the micros so that you can size appropriately, right? Just because the stop is larger, that does not mean you should take on more risk, right? In my opinion, you should divide your drawdown by 10, right? So if you have $4,000 of drawdown, right, having $400 of risk on any given trade makes sense, in my opinion. That's what I do for myself. Okay, so do the calculation to obtain $400 of risk, right? Do you know the points, right? Do we even know the point system here, chat? Do we know how many, chat, how many, for every $1 that ES moves, how much does your P&L change? We're only using one contract here. When using one contract on ES, how much does your P&L change every time this moves up $1 or down $1? Right? I'm saying $1. So it moved from 6,450 to 6,451. How much would your P&L change if this moved up $1 or down $1? For minis, It's 50, right? Your P&L would change by $50 if you're using one contract of ES, right? If one contract of ES went from $6,500 to $6,501, right? $1 change on the chart is a $50 change in P&L if you had one contract of ES. Micros, right? So get over here on MES. If you're using MES, the same amount of points would be a $5 change in your P&L. Okay? So if you don't know the point system, please go to the MyFundedFutures website. There is a point system on the website. You can just type in, you know, how much how much does each asset, right? It goes over each asset: oil, gold, euro, NQ, ES. There's an entire list showing the point system on MyFundedFutures. Just once again, just go and do the due diligence. Right? And so NQ, what is it for NQ, everyone? What is one contract of NQ? How much does your P&L change for every $1, every 1 point? Amazing. Very good job. Yes, 20. Okay. These are the things that you need to understand before you even open a trade, right? So if you're not doing your due diligence in terms of your risk management, I highly suggest you choose your education before trying to come in here and, you know, longing the tops and shorting the bottoms. Okay? Make sure you do your due diligence before you take any trades. It could be as simple as asking questions, right? We're going over this information every single day. So all you have to do is come in here and ask some questions. Okay? Is there a reason it's called the unicorn strategy? It's just a funny name. There is no reason behind it. Right? There's so many terminologies that are used in this business, but what you have to understand is we're all staring at the same information. Okay? So I don't care what terminology you use. If you want to use some funny names, be my guest. Right? I don't. Divergences, Kraken correlation, SMT, all of those three words mean the same exact thing. Right? So it's not the word that matters. It's the information shown on the screen. Okay? I don't care what terminology you use. So for example, if you wanted to call it a 222 Gartley pattern, a 222 Gartley is the same exact thing as a breaker block. But nobody knows about H.M. Gartley because he was way before our time, right? He wasn't here during the internet. So if you want to think that your favorite influencer created something, I'll be the first one to tell you that there's nothing new under the sun. This market was around much, much long ago. Okay? Right. So here's another example, right? Let's go back to that position that we looked at. Let's go back over here. Here's that long position that we just analyzed. All right. So here's another example, right? Instead of calling it a breaker, instead of calling it a 2-2 Gartley, instead of all of those things, why don't we just call it a breakout of a downtrend? Why aren't we just calling it a breakout of a downtrend, chat? This is just a simple breakout of a downtrend. Why don't we call it a breakout of a downtrend anymore? It could be this simple. It could be this simple. A breakout of a downtrend or a breaker block or a 222 Gartley, support and resistance. It doesn't matter. That's the point. It does not matter. Breakout sounds outdated. Yeah, see, that's the thing. It's like everybody falls into the new, internet, cool thing that's going around the internet. Like look, we just found support right here at the lows. We found support and we bounced. Why don't we call this a double bottom anymore? When I first started trading, this was a double bottom right here. Right? A double bottom. We found support and now we're going higher. What happened to the double bottoms? The double tops, the double bottoms, the head and shoulders. Oh, I forgot about that one too. Right? Here's the head and shoulders. Here's the left shoulder. Here's the head. Here's the right shoulder. We broke out from the neckline, and now we're going higher. What happened to the inverse head and shoulders? The cup and handle. There we go. That's what I'm talking about. The double bottoms retail nonsense. See, that's the point. It's all the same thing. We are all looking at the same exact information. There is nothing new under the sun. Don't fall for any of that marketing stuff. Just trade some breakouts of some downtrends and you'll be good to go. All right. So amazing conversation today. I didn't even notice that it's 10:30 already. I just want to make sure you guys know there's a bunch of sarcasm during my segment today. I want to also have fun with everybody. I also want to enjoy the community. There's that classic saying of do what you love. You'll never work a day in your life. So there will be days where we're very serious. There will be days where we have some fun. There will be some sarcasm. There will be some jokes. Let's enjoy what we're doing. Okay. Love what you do. You'll never work a day in your life. All right. I hope everybody enjoyed my segment. It is my time to go now. It is Tom's segment. Tom's just getting back from vacation. So ask him about vacation. Ask him how it went. Tom, where did you end up going, if you don't mind sharing with everybody?
Hey, Ash. Hey, everybody. Welcome, everyone, and good to be back. Where I was in Italy, by the way. Italy, specifically in Jesolo and Venice. Absolutely beautiful places, and it's so good to be back. I'm not Mr. Freeze, but I'm back. How you doing, Ash? What's up? How's the day so far?
Doing really good. Very happy. We had some withdrawals this week, so making more progress on the live account. Just trying to chip away at it one day at a time.
Nice.
I would love to go on a vacation, so maybe I should take a look at Italy as well. But
you definitely need to. It's a beautiful place.
How was it? Did you do anything fun?
Well, despite of trying to escape from some shark attacks, but anyway, no, I was just, laying at the beach, drinking some lemonade, and basically that's it. That's what I like to do. Just not do anything. Just sleep as much as I can. The food was amazing, by the way. Italian kitchen, I gotta tell you, it's amazing. So yeah,
you took the whole go touch some grass to a whole new level. We made it to the stand.
Absolutely into the next dimension, I would say so. Yeah.
Well, I'm very glad you're back. I'm very excited for your segment. I will hand the mic over to you. I hope you enjoy your day. Chat, let's welcome Tom up on the stage. Let's see what he has for us today.
All right.
Hope you all have a great day. I'll see you all tomorrow.
All right. See you tomorrow, Ash. Thank you so much. Well, this was an amazing few days for me. Thank you so much, Ash. Again, it was an amazing session. I was listening in. I was having some technical difficulties about 30 minutes ago, so I was like, I had to stop my own stream. Anyway, I was listening to Ash, and it was a really good and lots of value as always, so I really enjoyed it. How's everybody doing? Special hello to the mods and the hosts at MyFundedTV. How's the day so far? Don't worry, I have some stories from vacation. It's for next time, all right? It's going to be a next time session. It's going to be a special one, all right? First, we need to go through some technical stuff. Pigeon, I definitely, I never forget anyone. Abhishek, good to see you. And of course, I'm sorry if I forget to say hello to specifically like to everybody, but huge hello to everybody. No, 10, come on. I tried my best. I really did. I tried my best. Maybe it was the sun cream. I don't know. Maybe. Everything is good. Yeah. So far today was a little bit crazy though. So I was watching price action in the in the London stream on my channel. Tom, I can't speak. I'm sorry. Abyss, don't worry. I know what you're thinking. Don't worry. So anyway, in the London session, we had one single trade only that was a long position after sweeping the lows here after 2 a.m. Eastern Standard. So on the 1 minute chart, we took a long position. Sun cream does the magic. Yeah, it does. And so this was the only thing that we took earlier. And I got to say that the New York Open for me was, how should I say, not like a disaster, but I didn't see any setup that I can go with on NQ. I took a long on gold, and obviously you guys saw what happened on gold. Yeah, we saw that. So not much to say. Like really, I wasn't at the computer at the PPI news, but then after I thought like, okay, we should be able to get back above the news candle. But then I got confused. Like this here is 10 a.m. And after 10 a.m., I was like, man, is it going to go back to the so-called first fair value gap? I know it's super popular. Everybody likes the hype of the first fair value gap. And actually, it did go back there. But the question was, where is it going to go first? Is it going to first go and sweep the news candle high right there? Or are we going to go down and reclaim the first fair value gap? Well, obviously, we know what happened. So, yeah, exactly. So, as I was saying, the question mark around 10 a.m. for me, which is the first level that is going to get taken out in this price action. And I was just watching and keep watching. And by the time went by, I realized that I'm too late. There was no setup. Maybe if I would have switched to the 5 minute chart, because I was locked in on the 1 minute here. But even though, I mean, there was a liquidity, I would say, pocket here, a 15-minute CB, sell side imbalance, buy side inefficiency. That was the closest fair value gap, by the way, throughout the New York session on the upside. And so I was like, yeah, maybe it will go, maybe not. There was no fair value gap taken on the 5 minute as well. But anyway, I was just waiting. And just before I hopped on here at MyFunded TV, I saw that it actually reclaimed the first fair value gap right here. So what happens now? That's a good question. Because there's no zone on the downside that I like. But if we zoom out on the 15-minute, and by the way, if I look at the big picture, like kind of like a bird's eye view or whatever, but what I want to show you guys is that if I zoom out on the 15-minute, it kind of gives me the best overview, the best bird's eye view of the market. I mean, the 1 hour, 4 hour, yes, we all know that. But just a quick tape reading here, liquidity swept, and then again, orders collected after 10 a.m. here. And now we are back into the middle of this price action. Some would say, oh, it's a seek and destroy day. It could be. It could turn into a seek and destroy day. If it is, then we could continue even lower and then sweep this liquidity at 790 whatever. What's the low there, by the way? Let's check it. Just a second. 793.25. So we could go there. And as I said, right now we are in the middle. Stuck in the middle with you. Da-da-da. Anybody saw the movie Reservoir Dogs? You know, Quentin Tarantino. I love that movie. Anyway, so no position. But don't worry. We always have something to talk about. So tell me something. How was the week so far? Tell me some stories, everybody. Come on, chat. Give me something. Or give me questions before we dive into a supersonic topic here. Don't worry, I have a good one. Drop some accounts. That's not my job, man, but I would do that gladly. Passed your first evals. Congratulations, Dragon. Awesome. I am where I was in Italy. I was in Italy. Short vacation, you know. Did you on the pool stream? Yeah, I put on a yeah. I forgot to do that. Actually, I had such a good time. I mean, I had my laptop with me, but then no pool stream. So yeah, it was a good one. Pizza, yeah, I had a pizza in Venice. Yeah, anything trading related. Thank you for the questions, by the way. Hey, Rep Realm. Oh, Realme. Sorry, I butchered your name there. Okay, so we are in the middle here. No specific level that I'm looking for. I was actually checking the 1 minute as well, if there is a zone or something that we could look for. Hey, Barbie, good to see you. So nothing that I could look for here.
Spin the wheel. What's the truth? What's the deal?
It's happening. It's happening.
Funded TV giveaway.
What a code! Check out this code, everyone. We like it. Come on, everybody. Come on, everybody. 50. Scale account. Come on. I'm not this video. Oh my God. I'm actually overwhelmed. Let's go, everybody. 50 scale accounts. W's in the chat. Congratulations. And thank you. You know, I'm seeing, I'm going to tell you something. I should not tell you this. I'm going to tell you, I'm seeing the chat from Burke here. Anyway, this song is awesome. Burke, I'm going to tell you, this song is amazing. Is amazing. I love it. All right. Man, regarding our price action, again, you know, this is the time of the day when we cannot really do anything. So the coin toss trades, we're going to postpone it to next week. I'm going to have to do some adjustments about that. It's going to be our small little experiment, okay? It's going to be a very simple and small experiment, but I'm really thinking to do that. I might going to postpone it to next week. You got it, Abyss. Let's go. Congratulations. So 2 new accounts. Congrats there. So what I want to say is, because we don't have any targets, no entries here, and even though we shifted the structure, I'm not seeing any reason to jump into a short position because there's no levels. One more quick bird's eye view on the 1 hour chart. Nothing. It was easy. Nothing. We swept this. Oh, yeah. Oh, wow. Whoa, hold on. We swept this fair value gap here. Oh, okay. That's interesting. You see this? This fair value gap has been technically repriced by this wick. Technically, meaning that we might see some drop around here. Also, the 24K level is a nice round number. I forgot to put that on, but that doesn't really matter now. So we are just going to dive into the topics. So if any questions you guys have, let me know. Matt is live and talking good about me. Mr. Smith, tell Matt he's a good man. I respect him. God bless his soul. And I wish him a lot of profits, a long journey in his trading career with profits, and all the good. You know, just tell him. Okay. Really, let's move on. We must keep the energy positive, you know. I know the AM session is technically over. I know if you guys are now having lunch or breakfast, whatever, just sit back, relax, listen to my voice. Maybe sometimes, I mean, we can look the charts as well, but I'm not going to force myself into a trade. That's for sure. That is for sure. I'm not forcing myself into that. So, yeah. The cheapest MyFundedFutures account is, of course, it's the core account. I thought that's a trick question. Of course, it's the core account. So today's topic is actually about patience, because I know we talked about patience before, and I just told you guys that I'm not forcing myself into a coin toss trade, okay, or anything at this particular moment. Hey, Lance, good to see you. So I'm not forcing myself into anything. There's no setup for me, no entry model. And although I have something that could be interesting for some of you guys, maybe in the, hold on just a second. I do need to set up something. Okay, never mind. So I'm not really forcing myself, because patience is actually the thing that's paying the bills. I call it actually dividend, and you'll understand why. The patience dividend. Kind of crazy, right? But I like it. How waiting actually pays you more than trading. And I know, again, this topic could be boring, or I don't know, but no, it's not. It's actually very super important, to be honest. All right. So we need to talk about patience from a different angle. Right? Of course I'm right. So most traders actually think the more trades they take, the more they make. Obviously, we were all doing the same mistake. I was also thinking like, okay, if I make 20, I mean, again, let me say this. If you are taking like 30, 50, 100 trades a day and you're profitable, keep doing that. I'm like talking about the average number of trades, or like the average trader, average Joe like myself. Okay. So basically most traders think the more trades they take, the more they make. But in reality, the best returns often come from doing less, right? We all know that. Patience doesn't just protect your account, it compounds your results over time. And this is basically what we need to talk about. All right. So what is patience dividend? And I really like that. It's the long-term benefit, basically, what you get from waiting for your setups. Okay. It's because it's a long-term benefit. Waiting for your setups, passing on low-quality trades. You got to identify the low-quality trades as well. We always talk about the A++ setups, but passing the low-quality trades, also something that we need to dive into. All right. The benefit also comes from committing capital when the odds are in your favor. Like if there's a real good setup, when everything is lining up, even the context, like especially the context. Yeah, exactly. What is patience? I'm actually curious how you guys are identifying patience in trading. So patience is a multiplier also, because you avoid unnecessary losses, you preserve capital for high probability opportunities, and which is the most important, and that's why we are using this segment here. That's why we're utilizing this segment to remind ourselves that the mental energy should stay sharp. So the patience is basically a profit multiplier, because your mental energy stays sharp. Now, I know that the problem is that the urge is very high, that we need to push the button, pull the trigger, whatever, full porting the accounts. And we need to conquer those feelings. Okay. We need to overcome those feelings, or counter react, or do something against it. That's the goal. So, hey, Emma, good to see you. Patience is self-control. Exactly. We can say that. In trading, patience is like interest. The more you save it, the more it pays you. I know it sounds a little bit weird, but I wrote this down. Like, the more you save it, the more it pays you. And why basically a lot of traders are struggling with waiting. Patience is trading. I love that too, Sarah. Exactly. So why traders are struggling to wait? Mostly, I found out, and I'm talking about my own experience, is because of FOMO. Like, FOMO is the number one trigger, I think, against, or number one enemy against our patience. Like, we see the move, it's easy to look back and easy to say that, oh my, I predicted this 15-minute sell side imbalance, buy side inefficiency. Man, I missed this move. I do need to do something to make up the day for it. We need to find out another way to enter the market. I need to find another target, and you make up those new levels, new targets. You're trying to anticipate something that maybe not even there. So the FOMO is actually starting the whole downward spiral, So also, enemy of patience, or talking about struggling, like, it's boredom. Okay, feeling like you're not working unless you're in a trade. And we talked about this so much, like, we're underestimating how boredom is actually taking a negative toll on our trading, or on our daily routine, or not just the daily routine, but on our routine while trading in the specific session. Sometimes, especially, like, for example, here, if we assume that this here is an AM session, let it be London or New York, it is super difficult to sit through a session like this. Very, very difficult if the market is just consolidating. It's already a skill if you know when not to enter, but just to because you're bored and the market is not moving, it necessarily, oh my God, I can't speak. It doesn't necessarily means that you have to push the button just to take one direction, because yes, we all know that we should take buy side or sell side, but boredom, taking a trade out of boredom, is actually kills your patience. All right. So look at this reversal, by the way. Wow. Interesting. I'm kind of checking these levels myself. Very interesting. So yeah, exactly. Hey, Gustavo. Hey, good to see you. So also, there is one more feeling that maybe you guys have never encountered. Thank you, Abyss. It is basically impatience after a loss. Have you ever felt it? Especially on the first trade of the day, you have a loss. Have you ever felt like you're getting super impatient? You just want to enter right away. You want to push the reverse button. I'm usually using Quant Tower, like 100%. I'm using Quant Tower, but the reverse button is something I really don't like. I know it's on every platform. I know it's always there, the reverse button. I think, in my personal opinion, the reverse button is the button of doom. I think it's basically one of those buttons that's going to kill your account. In Quant Tower, by the way, you can, I don't know if you can customize it in other platforms, but in Quant Tower, you can get the reverse button out of the trade menu or menu. So you can get it off there. But actually, I hate that button. I think that's the worst that it can put on there. I'm sorry. I'm just unbiased, but the reverse button, never hit that. Mr. Smith, reverse my life button. Maybe. Yeah. It's dangerous. I think if you don't know what you're doing, if you're like trading on a high volume, like definitely scalping or using many number of trades throughout the session, maybe it could be good for you. But if you're like, the goal is to reduce down the number of trades, then I think the reverse button is basically the revenge trade button. We could call that. I think I'm going to rename somehow the reverse button. I don't know if I can do that on Quantower. Revenge trade button. Or I don't know, because that is just unnecessary. So, and by the way, there is one more thing about the struggle with the patience. I call it social pressure. We talked about this too. Initiate tilt button. I like that. Initiate account blow button. I like it too. What you are saying is exactly. I mean, that's what I'm saying. It's subjective, and I'm sorry if I offended anyone with the reverse button. Again, if you have a system, if you have something that you can utilize it, go for it. I'm sorry, I just don't like it personally. If you trade with it, if you have results, I take it back in that manner. So sorry, but I'm still not going to like that. But yeah, that's my opinion. And also, I wanted to say about the struggle with the patience thing. One of the causes is basically social pressure, as I said last time. Like, we're seeing a lot of stuff, Facebook, Twitter, everywhere, YouTube. Trading in social media became a huge part of the trading business, especially with prop firms. And obviously, more and more people showing results. I got to admit that, I think I should be showing more of my losses, because I do have losses myself. What I want to say about this is that, we are only humans, and we like to flash all over the place with our profits, of how much money we withdrawn, which is cool. But that's also one of the main, I'm not saying major issues, but it's somewhat creating a negative, like creating a backdoor to bad habits, and creating a backdoor to destroy your confidence in your trading, but most likely your patience as well. Like, by social pressure, I mean we're seeing people posting out lots of good results, withdrawing money, and actually that's very good because it's motivational. I think we should see more posts about losses as well. I should be also posting more about my losses. So that's it. Yeah, I understand, Pieter. Yeah, thank you. So, and we try to compare ourselves to others, but trading is so much different for everybody. Everybody has a different journey. Nobody's going to have the same exact journey. So, watching other people posting out those huge withdrawals, I'm talking especially about the big withdrawals. But anyway, it's actually putting your brain into let's just say impatient mode. And maybe I would put the social pressure almost on the same I would say, yeah, the same impact like having a FOMO, because especially when you're seeing people making all this money from prop firms, you don't want to you don't want to be left behind, and you just want to keep up with the pace. And it's just going to be, you're just going to dig yourself into a much, much bigger hole. And it's something you really don't want to do. What I'm saying is, it's cool to see everybody and learn from everybody in social media, and especially, seeing all these posts, but never forget that those losses are also there, and it's part of the game. Okay. So even the best traders out there who are posting awesome results are having the same losing days, weeks, sometimes even month. But the thing is that in social media, you don't really see that. And that's the kind of social pressure which is going to contradict your patience, right? Because you just want to make $10,000 every single day, which is technically possible, but it takes a lot of time, a lot of patience, a lot of discipline. All right. The market actually rewards discipline, not activity. All right. So it's rewarding your discipline, not your activity. And it's kind of strange to say it like that. It took me at least like, I don't know, 8-10 months, maybe a year to realize that I definitely don't need to put on like 10 trades a day or 20 trades a day. I should be okay with 1 or 2 trades. Anyway, let's just move on about the waiting game, aka patience, right? So how it's actually improving the results, right? Like there's like multiple ways to see this. One is like high win ratio. Skipping low quality setups means more of your trades are aligned with your edge. Now, I think this should be like a whole different topic, like how to skip or how to invalidate a setup, like how to identify low quality setups. Once you actually can filter, even though you see the entry model, even though if you have your targets on the screen on the chart, and you say like, okay, this order block is my target, I think is going to go there, but the 1 minute chart is just going sideways. There's no real movement. There's no volume in the market. Those are small, tiny information pieces that should be telling you that, okay, this could be a low probability setup. No news driver, market is flat, although the target is there, and seemingly we are creating that pattern, that price action pattern or trend line breakout or whatever it is that you're using. I would say that skipping the low quality setups could be maybe the number one or the highest improvement that you can make to practice to build up more patience, more discipline, right? Better risk to reward ratio, also good. I have it written down here as well. So better risk to reward ratio. I'm not saying go for 5-hour trades. I would say, as I said many times, go for 1 to 2. All right. No more than, actually, no, you guys are going to misunderstand, but I'm not saying it's a bad thing to go for 5-hour. Go for it. Although you must be prepared that if you're going for 4 or 5-hour trades, your win ratio could very well be somewhere around no trolling, about 30% or 25%. If you're always go for a 1 to 5 or 1 to 6 or 1 to 8, 30% win ratio with a 1 to 5, 30% win rate with a 1 to 5 win ratio, you're actually you're printing money, but you got to prepare for more losses in that case. Okay. And never forget when you're closing down partial profits or you're moving your stop, the risk to reward ratio and the whole edge, the whole system is changing. It's like Rubik's Cube. If you're moving your stop, if you're taking partials, it's really like a Rubik's Cube. It's changing constantly. Even if you think that, okay, if I would enter here on this setup, for example, there's no setup, don't worry, but I'm just giving you an example. If I would enter here and I would target previous day high with it says 3.4 risk to reward ratio, awesome. Are you able mentally? Do you have the patience? Do you have the mental edge, emotional edge to, even if the trade goes into your way here, even if it would, go up there, do you have the mental edge to wait for this trade without taking partials, without moving your stop loss until it goes to that previous day high? If yes, awesome. That's great, really. I would say 8 or 9 out of 10 people, maybe I said maybe 10 out of 10 people would be having trouble at least not moving your stop to break even or not taking partials along the way, especially with the 3.4 risk to reward ratio at the start, or 3.5, whatever. And as soon as you start to move your stop, as soon as you start making partial profits, that's cool. But then you cannot say that you're working with a 1 to 3 or 4 or whatever risk to reward ratio. It's changing, right? I think Matt could say a lot more about a risk to reward ratio because he's a good mathematician. He's good with these numbers, and that's why I never forget it's not that simple. So I just want to say better risk to reward ratio to improve your patience is good. My personal opinion, you can take it or leave it, maximum 1 to 2. And if you can, if the price action goes crazy, slows down, whatever, there's nothing wrong taking the trade off at 1.2, 1.3, 1.5, or if you have a strict 1-to-1 risk to reward ratio, that is awesome too. Actually, I do have an approach about this, which is going to be a different day's topic, that never go below 1-to-1 risk to reward ratio. If you're scalping, then it's fine, I would say so. But in day trading, I wouldn't really go. I mean, especially if you're like intraday swing trading, I wouldn't really go below 1-to-1 risk to reward ratio, right? Yeah, Matt is 1R Pro. There you go. I think, by the way, my personal opinion, even though I'm still trying to aim for 2R trades, I think the golden risk to reward ratio is definitely going to be closer to 1-to-1. So as I look back to my trades, like 1.2, 1.1, 1.3 usually. Anyway. So again, better risk to reward ratio is going to work in a positive way to improve your patience. All right. Also, we have drawdown control. I mean, I've written this down to myself, like drawdown control. You guys know how I approach the market. Once I put on the trade, I forget about it. I don't care. I want to see a full stop loss or a full TP. But if you have some sort of a system, because your edge can also dictate with those rules, with certain rules. I don't know. I mean, there's multiple ways to have rules for canceling your trade, or I mean, or closing your complete trade, or just closing it partially in a loss. There is many ways. Hey, Koa, good to see you. Yeah, I'm back. So there's many ways to mitigate your risk. If your edge or your risk management profile says that you should be canceling, like for example, let me give you an example here. You entered here, your stop loss is down here, then you can say that, okay, 50% at my stop loss, I'm going to close one contract. Or so for example, you're entered with 2 micro or 4 micro, I'm going to close 50% of my trade if it goes down to 50% of my stop. And if it still goes down lower, you can close the rest. That's also risk management style. I'm not doing that, but drawdown control can also help you with the waiting game and with patience. I'm not trading. Yeah, Rafael, I'm not touching this NQ right now. No way. And also, I would say less exposure to rapid emotional swings. Like we all like to see when Nasdaq is selling off or skyrocketing, like maybe President Trump is saying or tweeting something or whatever. Maybe Papa Powell is saying something. I don't know, but we see that movement happening maybe on an unscheduled event, and you're just saying, "Oh my, I want to get into the game." No. You never know when the bounce is happening. You never know when you're going to see a reaction on a certain price level. I would have got cooked if I did. Oh, I see. Yeah, this was definitely an interesting session. So sell side swept, buy side swept, and now kind of felt like it's inverting this gap. But are we going to go down to 793? Maybe. I'm not sure. So anyway, how to practice patience without missing opportunities. That's also a good question. Like you can do pre-market planning. Like, for example, mark up your A+ levels. That's what I do with the zones. You can do it before the session. If price isn't near them, you wait. So if we are in the middle here, and for example, if I would have like a good level up there and a good level up here, that's awesome. But which way to go? Like, I'm just going to engage if price is going closer to one of these levels. Like, if my target would be down there, actually, let me get this off. Let's just use this as an example. If my target would be 793, I know that if I want to go for the next sell side sweep at 793, I'm definitely not going to engage until price is not going below like 863. Even though I'm seeing that there is an inversion fair value gap happening as we speak, I'm just not going to engage. Well, maybe if you have enough data and information to use these setups, then you can go if it trades below this gap. But as I said, you can also mark your levels even throughout the session, but it's best to do it pre-session and then just say, okay, I'm not going to do anything until we go through that 862 level. There's nothing wrong with that. You think like, okay, but then you're throwing out money on the window because you're just missing out like 30 points or 40 points on this move to the downside. And so what? Who cares? Even if you can enter here and you can still target that sell side liquidity, there's your 1-to-1 risk to reward ratio. I guess there's a way to find the proper swing point if you're short even below that 862 level. Okay, so that's something. Hey, Jebu, it's good to see you. So that's also something that you can do. Or if you're targeting the, for example, an order block, which is up there at 24, yeah, there's an order block at 24,019. Then I can say like, okay, I'm not going to do anything until price, I'm sorry, this is not the one I was looking for, until price is not going higher than 943. So this is going to be my no trade zone. And actually, I wanted to talk about this, but maybe next time, how you can actually use no trade zones, to help you, to keep you out from bad or poor market conditions. It's basically the same when you're marking up a consolidation period here, or you can also mark up even if the market is moving, right? Like, for example, here, I mean, in this AM session, you can still say that, okay, liquidity sweep has happened, picked up liquidity on both sides. If it still wants to continue lower, my game plan is that I'm going to wait until we get out from this no trade zone. Okay. And then I'm going to be looking for sells somewhere below 862. I actually wanted to talk about this much earlier, but that's just a small technique that you can use, because we're always looking for something some excuse. Come on, everybody, tell me we're always looking for some excuse to get into the trade. I'm sorry. I don't want to hurt anyone's feelings, but that we are addicted to the markets, right? Yeah, you can say we're gamblers, but we are looking for an excuse to push that button. Now, if you identify these levels like no trade zones, it's going to some way help you to keep yourself out from a trade. And I know time is flying, but there's so much stuff to talk about here. So anyway, Pre-market planning, as I was saying, that's something that helps you. Okay. If price isn't near, then you wait. That's just what I want to say. So we also talked about the daily trade cap, like how many trades per day, just the usual stuff. That's also something that works for your favor in terms of patience. Or like circling back to this no trade zone, you can also put alerts on the chart. I like to use TradingView for this matter. You can put alerts on the chart, so you don't have to watch every tick or even go down to the 1 minute time frame or the 30-second time frame or 5-second time frame. If you put on those alerts, at least you can just sit back and relax and because actually locking into the chart and going down to the 1 minute, even sometimes I'm not looking at the 30-minute chart, but if you're looking at those subatomic time frames, that's like draining all your energy down. You might not realize it now, but it's definitely taking a lot of energy. All right, a lot. So I wanted to say something about this, but I forgot. Anyway, I just want to say, if the setup is not there, then the trade isn't either. Okay, that's very important. And remind me, I want to talk about indicators. So I'm going to be coming back into this point. I want to talk about indicators. So let's just move on with this. Obviously, the legacy accounts like the starter had daily loss and maximum drawdown limits. Now, all the accounts, I mean, there's no daily loss limits now. But still, despite the fact that we don't have a daily loss at MyFundedFutures, that doesn't mean that you should not set up a mental stop level, right? Patience actually means you take through your losses, protect your capital for the right moment, and improve your chances of staying funded longer. That would be the goal. It's hard to do it. I know. It's hard. But it is what it is. And yeah, exactly. So I also have this, like, every bad trade brings you closer to a rule violation, by the way. But every patient pass, like passing on the low quality trades, keeps you funded. Okay. So that's just sort of important, I think, to remember. I just want to say about this, like, patience is not doing it's not doing nothing. It's choosing when to act. Basically, every trade you skip that doesn't meet your criteria is a win for your account, for your account's longevity. Is that a word? That's a word. I'm sorry, sometimes pronunciation. So every trade that you skip that doesn't meet your criteria is a win for the longevity of your funded account. That's what I wanted to say. All right. If you skip those low quality trades, think about that. That's going to keep you in for the long term. All right. Exactly. And by the way, I'm also curious about this, because just a question. Would you rather take like 5 trades per day or 1 perfect trade per day? 5 trades, but you don't know, maybe not 2 perfect trades, or 1 absolutely perfect trade for the day. 1 perfect trade. Exactly. Thank you for the answers. Nothing wrong with 5. You might be saying, like, okay, I like to take more trades, but reducing yourself to 1 perfect trade. 3. I like the 3 too. 94. Look at this. We're going back into the range. Yeah, exactly. So, and also, like working on your discipline, working on your patience, and working on the waiting game. I need to mention indicators as well. I would say not specifically one or two specific indicators, but I would call these mechanical systems. Okay. From my experience, I learned that using mechanical systems to wait for a trade setup can actually help a lot, like really a lot, by not jumping into unnecessary trades or skipping low quality setups or not entering setups like basically helps you with the waiting game. If you're waiting let's just go for example over the moving average cross, or let's just go with the moving averages for now. If price is not, let's say you have like 3 or 4 moving averages. If those, I know moving averages are lacking indicators or lagging indicators, and we all know that every indicator gets the information from the past, we know. But still, you have a certain exact setup. You have a mechanical setup saying that when the 21 crosses the 50 and we are below the 200 or whatever, that's when we enter to the short or to a long, or sorry, that's a short, or vice versa. That is exactly a mechanical approach. Now, with the advantage of this, there's many disadvantages too, but the biggest advantage of using a mechanical system is that if the rules are stone written for those certain indicators, that can actually help you to like not push the button, to wait patiently on the sidelines. That's the biggest advantage, I think, for the mechanical systems. It can be multiple indicators. It can be like, I don't know, volume indicator, MACD, RSI, Traders Dynamic Index, whatever, stochastic. I mean, yeah, I know many of you guys are saying those are garbage indicators, whatever. I'm just trying to say, if there's a combination that has a proven edge, it's very important. If it has a proven edge, then using a mechanical system can be something that is going to keep you out from certain market conditions or certain setups, right? I never thought I would say this because, like, as I said 2 or 3 years ago, I was like, I'm frozen again. Come on, Angel. Am I frozen? I'm not. The only indicator you need is volume profile. Maybe. I'm not saying not. So it was too easy, right, Angel? I know. I know I'm not frozen. So maybe it's a volume indicator. Maybe it's whatever. By the way, when I was starting out trading, I was not starting out, but yeah, I would say starting out, and I was burning away my personal cash account in a forex brokerage. I was using Traders Dynamic Index a lot. The TDI indicator, and it was on MetaTrader. At least I used the version on MetaTrader. I was burning a lot of money, but I would say it was basically because of poor risk management. All the usual stuff like revenge trading, over trading, and all that such. My idea was just to say and confirm that, not confirm, but just to put some light on this idea that having a mechanical system can actually help with the patience and the waiting game. Quite a lot, by the way. And I'm also testing a mechanical system. I told you guys many times, based on moving averages and some other indicators. To be honest, and this is just a small teaser for Simon, don't get me with that. So this is just a small teaser, but I might gonna be implementing those indicators into my day trading setup. By the way, we'll see. So I exactly know who is behind me, Raphael. So I can't tell you. But if I look back, it's going to be bad. I can't tell you who's behind me. So anyway, you know how it is. I just can't look back because it can happen. So speaking of mechanical systems, sorry, I was just joking. So do you have questions about the about this? About the topic, about risk management, about the mental game, about patience, about discipline, about mechanical systems? Let me know. I still have a few minutes. Maybe I covered this topic a little bit too fast. Yeah, exactly. I also wanted to say, like, the patience dividend compounds as well. So it's actually a compounding effect, the patience dividend. Okay. The more you protect your capital, the more you can grow. But obviously, we talked about this. Mental discipline. Let me hear the question specifically. Mental discipline is a topic we can talk all day, all night. Yeah. If I take a loss with 1 mini, should I size down to 5 micro? Depending on your account size and depending on your strategy, depending on your daily loss limit, depending on your daily number of trades, I wouldn't say you necessarily have 50K. Okay. So I wouldn't say you necessarily have to size down the position, depending on your stop as well, like how much you lost on that trade. On a 50K account, you have usually like $2,000 wiggle room there. And so with 1 mini, it's super easy to lose like $400 is what I wanted to say. With 1 mini, it's super easy to do that. If you lose I think, especially on a funded account, if it's a funded, 20 points, exactly. So if it's a funded account, in my honest opinion is that $400 is a little bit too much. But let's assume that you lose $400. Let's print the shirt. I'm down for it, Abhishek. I'm down for it. We can do that. So I just want to say, if you lose $400, maybe your second trade, you shouldn't lose more than 200, right? So if you size down to 5 micro, that's okay. If you, for example, lose $200 with 5 micros on the initial trade, I see nothing wrong with going in for a second or for the next trade with another 5 micros. Obviously, it depends on your stop, your strategy, entry, lots of stuff. Hey, Michael, good to see you. So, no, not bikini bottom. No. So, I would say maybe start with smaller, so you can have more room to trade, like 5 micros for the initial trade. And then if you lose, you can go again with 5 micros. And if you have 2 losses in a row, then maybe go down to 3 micros. And that's it. That's something I would say that's okay. 1 mini for me is a little bit too much, but Hey, Matt, what's happening? I got some tan. I tried my best, but the sun cream, it's a strong one. It was a strong one. It was like the factor number. That's what they say. The factor. It was like a 50 or maybe 60. I don't know. Hey, Sticky, good to see you. Oh yeah, the Rocket Scooter fam is here. Okay, all right. Oh, it's that time already. Nice. Speedo. Barbie wants to break me. I know. Maybe I will do that. I don't want to leave you guys. Don't worry. You know what? Maybe I'll just stay here for the rest of the day. Who cares? I'm not sending it. No. Well, maybe back in the 70s, Craig. But anyway, I just want to say, and my PNL, what? And my PNL, I can stand here in a Speedo and be looked at like an effing hero. Oh my God. Oh my God. I can't believe I said that. Anyway, you guys can't break me. So I just want to say, we are in this no trade zone. It's definitely an area where I would say like, okay, I would definitely not take a trade here. As I said, even if I would look for something, I would want to go below 862 and up there around 943. The final thoughts for the technical side. And by the way, any more questions before I finish up with my segment, let me know. I know Matt is going to be around soon. I must say it's good to be back again. Next week, I have so many ideas for you guys. I've planned a few things. I mean, some topics more likely. And we might be starting to do something with that experiment, with the coin toss thing, you know. But I'm going to be the one who is deciding the stop loss and the risk. Okay, but we're going to, it's going to be an experiment. We'll see how it goes. Okay. So, yeah, I'm doing great. Hey, Leo, good to see you. So you guys want to decide? I don't think that's it. I know. No, the coin is going to decide the direction. Jumanji, or is that? I don't know, Simon. I'm not sure. Get him all. No full porting. No full porting. We have to practice proper risk management. That's why we're here for. Oh yeah, we could Dodger. That would be a good idea. So, as I said, we got to work on the patience. That was today's topic. Work on discipline, but most likely patience. We went through what we need to do, what can improve your results. Okay, pre-market planning. Don't forget it. Higher win ratio, better risk to reward ratio, drawdown control. Okay, got to watch for that. All right. I failed the Sigma test. Oh my God. I didn't want that. Well, what can I say? I really did my best. So, and here's the man. Look at him. What's that on your forehead? I can't.
Where's the music? Oh. So I do the sticky thing every time I have a 10K day, and that was an 10K day today.
Another 10K day. Oh my gosh. Oh my gosh.
I had a kind of a flat, slightly tiny green day today. A bunch of my accounts took a loss. A bunch of them made money, and that was kind of like net was kind of like, yeah. But today was a good day. Everything was good. Textbook.
That is awesome. Congratulations, guys. I don't know. I think I have to go later and stick around in Matt's stream and watch every word what he's saying, not just here but in his channel too. But guys, you got to stay and listen to him. This is 10K a day. By the way, that's one of my goals for this year. I don't know. We'll see. But that's a lot.
How was your vacation, man? You looking refreshed?
I'm fully energized. I feel so good. It was just what I needed. No thinking, absolutely just laying at the beach, getting tanned and drinking some lemonade. And that's it.
Nice. Lemonade and what? What was
lemonade with some Spicer chasers, but maybe I'm not allowed to say that. That's small alcohol here and there, but it's fine. It's okay.
Nice. If I was on the beach in Italy, I would be doing more of that than anything else, laying on the beach with a drink.
Oh yeah,
that would be all I would do.
I did that.
Somebody in chat was like lemonade.
yeah. Okay, chat. Thank you so much, everybody. This was a great session, and thanks for the positive vibes. It's good to be here again. I did forget to say something. Anyway, maybe I'll come back and interrupt Matt if I will know what I wanted to say. But anyway, thank you so much for the vibes. And Matt, have a great session. Have a great rest of the day, and see you
later. Awesome.
All right. Cheers.
All right. Let me get everybody. Goodbye, Tom. Everybody say goodbye to Tom. There's some dubs in chat. So yeah, 10K day to now. You may be wondering where the rest of the picture is. Let me explain something that happened. There's about $1,800 to $2,000 missing because a certain prop firm, we're not mentioning it. And it's not MyFundedFutures, by the way. That's stellar. This guy made almost $3,000 today of an A+ setup. But another prop firm, for some reason, all my accounts mysteriously disappeared in the platform as it's going through some kind of technical glitches over there. I made some trades last night, and then I woke up this morning, and then all the accounts are gone. They're active on the dashboard, but they're not on the trade. They're not on the Trade-Ovate. So, yeah. One second, let me tweet out about the show, get people to come on in here. And today for Lunch Money with Matt, tons of trading alpha. Watch me trade live, good tunes, and more. Get on here. We need a good picture though to put into that tweet. You know what I mean? It's kind of like mysteriously gone, and then the customer service was like, "Oh, we were updating our system in the back end. Some of the accounts may have been affected." Like, so all of my accounts got affected. Dang it! So, add whatever on that screen is, and add like $2,000 to that, and then that's where I got the 10K from. So, unfortunately, I wish I could be doing more. It could be maybe 20. Who freaking knows? Welcome, chat. Welcome back to a wonderful, beautiful Thursday. I think today's Thursday. It certainly is Thursday on my calendar. Coming back to a wonderful afternoon. I've been trading all morning. This was textbook setups. Somebody said, "Tip stop your tip in no time." No, it wasn't tip stop. But somebody said, "Show him your bikini tan, Tom." You guys are hilarious. Y'all are cracking me up. Catching up. Anywho, going forward, I had lovely trades. This was amazing. Like right out the door today, I was trading some really good pivoting action. Where is my pivot here? S&P had a pivot right here at the open. I bought right at monthly hedge dynamic overnight. Right there, I closed out. Super simple. That's it. I made, it was roughly like maybe 10, 12 points I made off of that trade, got out of the way, closed out. The 3 accounts I traded each made about $1,000 each. Then I called it, came to work this morning, showed up to this beautiful A+ setup. PPI dropped us lower, and I'll talk about that in a minute. PPI is hinting at a sort of worse year coming forward with like the rest of what's going to happen. Fell down, landed right down in here. I randomly decided to long at this consolidation just to bet that we would be at least trading to half gap if resilience was positive at the open. So I got in early, put in a contract, and then the market bumped up and opened right here. And then right when it opened, I got all my indicators front and center. I looked at everything. Positive, all across the board. And the first thing I did, if you can go to my stream and watch within a second of opening, I go, or a minute of opening, I go, yes, A+ setup. Everything's lined up, beautiful long. And so I had longed in one account early pre-market, and that account was up. And then right here, I longed, and everything else I had, everything except for the 7 accounts that are not there. I couldn't touch them. So mad about that, but whatever. Spilt milk. Keep going forward. Longed all the way through to half gap. Resilience started going negative, so I took profit in majority of the accounts. And then right when it started bouncing there again, resilience went positive right on this red candle right here, exactly here. And I loaded up again and all the rest of the accounts again and made a second trade right to there, the ones that I could, and then closed everything out and then just chilled. And then right here on the first bounce it opened, I longed a second time right to there and then closed out. I'm consistency locked in all the accounts except for one that I can still trade on, which is this one right here. Can make about $500 more. And my funded live account is up like $3,000. So I don't really like to trade the B setups, which is half gap resilience, in my live account. I like to take it a little more seriously because it does have DLL. So I try to make sure I get A+ setups only on that. So I usually wait. But today was a perfect opportunity for that. Other than that, market's chilling in the middle, chilling like a villain. But altogether, another 10K, which is nice. Yeah, textbook rocket scooter, easy stuff today. Wasn't that hard. Yesterday was harder. Today was a little easier. You're going to teach your dog how to trade 10K days. So I mentioned earlier a prop firm which will remain unnamed. All my accounts disappeared from my Trade-Evate. Gone. They're just not there. They're not failed. They're all making money and getting payouts. They're just gone. They didn't show up. They're active on the dashboard, everything. And certain prop firms said, and it's not MyFundedFutures, by the way. We never have problems with MyFundedFutures. I've never had a single problem with MyFundedFutures. It's another firm that I've traded with that I've had for a while. And just essentially they were upgrading their back end and some accounts just disappeared from whatever. It's like they're inactive, but they're not inactive. They're active on the dashboard, but they don't show up. And when I log into my Trade-Evate, and then in my community, a lot happened to a lot of people actually. So, no profit counts. I know what I'm saying is I don't know if the profit counts actually because I can't see the account, but the profit should count. The issue is probably it's just not showing up in the platform. So, yeah. What's my average winning and losing trade time? I would say my average winning trade time is less than half an hour. My average losing trade time is probably half an hour to an hour, give or take. On one of my trades, my average trading time is over an hour. Matt, do you get mad? I'm mad. I'm very mad right now. Can't you tell? Look how mad I look. Am I passing for a person that's mad? Because it's kind of hard to be mad when you made money. And that's another thing that I have to say about trading in the trading community. Why people sometimes get angry all the time. I'm a pretty chill guy. You get trolled on occasion. When you get big and popular, you get trolled on occasion. It happens. But the idea is that why are people mad all the time and yelling at each other? I feel like it's really hard to be mad when you have a lot of money, right? How these traders all mad at each other all the time makes me wonder. You know what I mean? Traders, successful traders, mad at each other all the time. How can you be mad when you're doing so well in life? It's so hard to be mad, right, Sam? Anywho, green Matt, you see how angry Matt looks? Let's see, hold on. Picture of green Matt, hold on. I don't know if they're some of you guys' AI photos are work appropriate for MyFunded TV. But the ones you guys saw in the Socks Mission channel are hilarious. You don't growl, you purr. Hey, that's nice. See, keep it light, keep it easy. I get mad when my avocado toast is late. I get very angry when my breakfast is late. How do I classify a good or bad prop? What makes a prop account worth buying? Well, I have a whole system of determining if I think a prop is good or not. You have to determine what's valuable to you. And the prop is going to have a couple of setups. You're going to have a cost. You're going to get an account size for the cost, which is the total drawdown in the account. So cost per drawdown is important. Certain prop accounts are cheaper and more expensive than others. And then the value is added in other areas. Like MyFundedFutures is why I say that they're the number one and why I joined the team is because according to my model, which is mathematical model, MyFundedFutures has the highest score, the best value and features for what you spend. With MyFundedFutures, you get all these really good layouts of rules, like no consistency, no DLL unfunded. This is like really like DLL is like the bane of my existence. I hate daily loss limit. I can't scale an account like that. I don't want to waste my time trading for pennies. I want to scale an account. So no DLL is kind of like my requirement when I trade. And cost, and like you can, if firms get rid of a lot of these rules, then the cost usually is a lot more. And so to have an affordable program with not a lot of rules, it's like why MyFunded is the best, right? I would certainly think that MyFunded's on everybody's top 3 list as far as offerings. Offerings are just stellar. And then they came out with new offerings and made the old ones even better. So it's kind of like, okay, a no-brainer. But the value comes down to what you think is valuable. Now, what I think is valuable is very important is time and market. A prop firm asked me one time, hey, can you rep us or whatever? I go look at their rules and it's like you get paid out every 10 days and the payout was small. And so there's a ratio of how much the payout is per day of trading day. So if it's a $2,000 payout every 10 days, you're only making $200 a day. Who wants that, right? But if you're getting like, up to 80K payout in 14 days with MyFunded on the pro account, as a matter of fact, you can do the math there. 80K 80K divided by 14 is like 6,000 a day, right? So who wants to make $200 a day versus 6,000 a day potential maximum? Like you're uncapped in that particular perspective. Any trader out there in the world would be happy with potentially making 6K a day, which is why the MyFunded Pro account is my consideration the best prop account to buy, period, in all prop accounts, because the scalability is just massive. And then you would say, well, God, the account probably costs like 500 or $1,000, and you're like, no, it's like $220. And then you go, okay, it's cheap and the rules are great. So what's the catch? And you go, well, time and market. Well, yeah, 14 days is a trek to get the big payout. So what if that's too long for you? Well, then they have the scale plan, 5 days to pay out, right? These things are they have like one for every kind of trader. So you have to find a firm that has something that matches your criteria. Maybe you're not going to go for grand slams. Maybe you just want some base hits. So 5 days to pay out. Other firms are 7 days, 10 days, whatever. 5 days of payout is great. Anything keeps you in the market as little as possible to pay out is, I think, one of the most valuable rules or leniencies to have, because every day trading in the market is a day that you can flip a coin wrong and the Trump tweet blows your account up. Like I tell people that when you're looking at it and you find value, a lot of times people don't know how to see what's valuable. And a couple of rules of thumb is you have your cost to drawdown ratio, your cost to MLL ratio, to find out how far your dollar is spreading. MLL is your actual account size. Don't let the 50K, 100K fool you. That's not really the account size. The account size is your maximum loss limit. If it's a $3,000 drawdown to blow up, it's a $3,000 account. So you do that ratio, and you want that ratio to be pretty high. Different types of accounts will have different values of what high is. End of the day drawdown versus trailing drawdown will have different ratios amongst the props. Now I'll tell you the cost to drawdown ratio is at the high end of the scale for MyFunded, which is what I always liked with these guys. Another thing is time and market. Time and market's the most important thing. How long until you get your payout? This is probably the second most valuable piece of information when comparing props. If a prop costs $200 per account and takes 5 days to pass, and then there's an account that costs $100 but is 7 days to pass, you may say, well, what's the difference? It's just 2 extra days. No. This value is completely deteriorated. Just because it's half as expensive, 2 extra days reduces your chance in a coin flip of your probability by a quarter, 1/2 to the end. Every day you trade is a day you lose the whole thing. So every day you trade is another coin flip that goes against you. That's 2 extra possible days. Your chances of success completely plummet with just one extra day reduces your chances by half if you believe in trading being a coin flip or your day being a coin flip. It's not really the case because you need some risk management. But all things being equal, in a volatile environment, you're going to pick the direction wrong or right every other day. And every other day, the wrong side of the trade can blow you up without a stop. So 2 days in the market, every extra day off the clock is worth couple $100 extra to me to pay for the account. So you want something that's quick to pay out. This is like the most important things in trading. Every day you're in the market is a chance that huge percentage of people are going to bust. So time and market reduced is good. You want that as small as possible. Anything that's in the 3 to 5 day to payout range, like the scale account or the core account, that's your sweet spot. 3 to 5 days to pay out is good. A week of trading. Anything that goes for grand slam payouts, as long as it's less than 2 weeks, which is pro is right on the edge of the 2 weeks, I think is good. So that's basically what I think. Other things are specific rules that match your trading style. Drawdown type, and type has to do with how you like to trade. Drawdown style, there's a bunch of types. There's static, there's end of the day, there's trailing drawdown, there's swing trading props out there, whatever. Which one works for you? Now, for me, I love the statics, but you don't really find a lot of firms that have them, and they're usually very expensive because the drawdown doesn't move at all. So you're not going to find those a lot, but if you do, you want the other factors to also be good. My favorite all around is end of the day drawdown because it is static in the day and just resets once a day. And so end of the day drawdown is like the best well-rounded kind of account. Trailing drawdown, I wouldn't touch that if you paid me to. I think trailing drawdown is a kind of scummy. When you're trading, your drawdown's going with you, then all of a sudden you're up 8K, but you're only up 6K now. You actually busted the account even though you made $6,000. Real trading is never going to treat you that way. That's kind of a crummy way to screw traders out of a win by holding through drawdown. Real traders are going to have to learn to hold through drawdown and to adjust their position. Trailing drawdown doesn't give you any applicable practice in real world trading. It punishes you for things that real world trading doesn't punish you for. So I would say if you want my advice, take it with a grain of salt. Trailing drawdowns are just entirely too difficult to be worth your time. They're usually dirt cheap, which is why, because they can squeeze you out even when you're winning. I don't like to fuss with that. So usually end of the day drawdown is great, and all of my fundeds have that. Quick time in market, good cost, low cost to drawdown ratio, and then end of the day, which is pretty much one of my favorite drawdown types. Then you have to find the other types of rules that you like. You like consistency or DLL or uncapped payouts, usually are the three that kind of each firm balances an act between all three of them, which is one thing that I like to say is that you don't normally see all three of them ever. You actually never see all three of them ever. You're usually going to get one or two or three of those rules. I'm sorry, one or two of those rules there because the prop firm's going to have its risk model, right? So some firms will have like uncapped payouts, but then give you DLL and consistency. Some firms will have no DLL, but they'll give you consistency and let the payouts uncapped. What I like about MyFunded is no consistency and no DLL. And I like to give half credit to uncapped because even though it's capped, the pro account, 80% of 100K is an 80K payout. If you haven't made an 80K payout, it's uncapped for you, which essentially makes it the only firm in town that has 2.5 of those rules gone. Every other firm with end of the day drawdown accounts will have one, if not two, if not all three of those rules there. So you got to find out which firm you're trading out there has the rules that you like that match your trading style. For me, I don't care about consistency. I'm a high win rate trader. If I bust consistency, I'm going to keep winning and then just ultimately get my payout, which is fine. I hate DLL with a passion. You can't pay me enough to like DLL. I hate DLL because DLL is a secret cap to your scalability. You might not think about it, but if you say that like, well, it's an uncapped payout, but then if it has $1,000 DLL, well, okay, think about that. You're only trading so many R's multipliers of your risk that you're taking. And if you're trading like a 2R setup, 2 times your risk, if you're only risking 10 points, you're only making 20 points. If you're only risking 1,000, which is your DLL before you blow up, then you're only making 2,000 on a 2R setup. So therefore, it doesn't matter if the payouts are uncapped. They're going to throttle how much you can make because you can only scale at a multiple of your DLL. So DLL that's low limits your scalability and also means that if you mess up your first trade, you're done for the day if you're trading too high. So it limits how fast you can grow in the maneuverability of the account. You can't make many mistakes. I hate DLL. And that's just me. Some of you guys may work well with your strategy. Those rules match whatever your strategy style is. And for me, I like to trade certain trades every single time so that the odds eventually play out, which means I got to take the attempt 6, 7, 8 times sometimes. And if I lose 3 or 4, DLL sits me out for the day when I still have room to move. In my real trading account, I don't have that problem. So for me, I value accounts with no DLL personally because I like to scale with it. As you guys can tell, do I hate DLL? Have I not said it enough? I hate DLL. And again, MyFundedFutures has the no DLL inside of these accounts. All 3 of their plans have it, don't have it. So this is why I say I believe MyFundedFutures is the best. I'm not just saying that because I'm wearing the shirt and I'm working here. I really chose to work here because they're the best. You know, I had options. So hands down, top of my list. I was completely honored they asked me to be on the show. I was like, you guys are the best firm in town. That's great. So cool way I trade, it matches very well with what I trade with. So, but anywho, here's what answers your question as to what values a prop firm. You know, you want a decent price, you want as quick as you can to pay out, and then you want those 3 rules that match your trading style. Some firms that have uncapped payouts but a DLL, I might use those because maybe I want to just scale those accounts over time, and bam, make a 6-figure payout so I can brag about it on socials. But then that account's not making me an income every month. It's just a bigger goal account. Then the accounts with maybe scaled payouts, like like shorter windows and smaller payouts, but easier rules like the scale plan, I might be able to get consistent payouts, right? Like a payout every month or so, maybe 2 a month, maybe 3 a month. And that's money in your pocket, right? As time goes by. So each account serves a different purpose, which is why I trade different firms. It's nice to go out there and say, hey, look, I made, $3,600 payout. But it's also cool to say, hey, look, I made a $240,000 payout. Some of them get better attention than others. And so for different reasons, you can choose to trade different accounts based on the payout structure, based on what your goals are. And so that's basically it. What I hate more than DLL with consistency rule. Yeah, when you have those two together, consistency rule is designed to prevent you from making all of your gains in a single trade and then the rest of your gains just floating till the end. Like you just lucked out, YOLOing the account and passing. So consistency prevents like single burst events and to keep you from going up in one burp. DLL limits the angle at which you grow. DLL sets this angle for you. So on an ideal day where you don't win it all in one trade, DLL sets a maximum theta or angle distance of how your actually net lit grows. You can't really grow any faster than some multiple DLL times R. DLL times R gives you the formula on your coordinate, how fast you can grow the account. So consistency prevents you from growing it too fast. DLL times your risk multiplier gives you the maximum you will grow. So inside of this curve, you're not allowed to do this because of the consistency and get a speed bump like that. You'll get punished on that. So your growth rate is set by your DLL. And these are this is prop firm math. If you understand the risk model, this is really what it is. Consistency and DLL both are going to lock you to a moderate growth. And you're not going to really, and you're just growing slowly, and then you make a mistake and lose it all in a single day. Yeah. Not a big fan of that. Consistency prevents gambling. Well, right. But also if you're not gambling too, consistency also punishes you for what real Wall Street doesn't punish you. Number one is if you're in a trade and some random news event comes out and it falls, you lose on DLL. Okay. Or you lose by blowing up. But that risk you're taking should appropriately be balanced by washing for the other half of the time that it bounces the other way. In my real trading account, news events sometimes hit me, and this is real trading account, not prop account. Sometimes the news event dumps my account. Sometimes the news event rallies the account. And if for every 5 or 10,000 I lose on a bad Trump tweet, the next time it goes in my favor. And over time, they should wash out and be zeroed, right? So in a real trading account, the idea that you win on occasion, you're not gambling. It's just the unfortunate nature of markets chopping all over the place. You want the chop to work in your favor half the time and work against you half the time. And your risk management, just make sure you neutralize it. And then you're doing fine. The news shouldn't affect you if you trade well around it. But in the prop space, you're punished when it goes against you, and then you're also punished when it goes in your favor. So you're actually hit on both sides, which means you just have to kind of trade with your fingers crossed, begging that nothing happens while you're trading, right? And even though it does, quote unquote, prevent gambling, yes, but it also removes that one thing that you kind of need in a real account to balance out the times the news unfortunately goes against you. Even if it's not news that you can't avoid, sometimes it's news you just can't avoid. You're trading and then somebody says something, the market just dumps underneath your feet. For me, anytime NASDAQ spontaneously drops 40 points, I close out no matter what. If the NASDAQ spontaneously rallies 40 points, I close out no matter what. I don't like sudden swooping candles to control my profit. I like to just get out with a certain fixed loss or fixed win and then just let the market move on that crazy news that comes out of nowhere. That way it does wash. I don't want my trading to be dictated by how lucky I am and the market swings like that. I kind of want to just win half of them and lose half of them in a fixed amount and have them have zero effect on my account. Problem with DLL and consistency is it doesn't allow you to have the other side of that. You're punished both ways. And so over time, that is what I like to call the house advantage. So if you guys are looking at the math of that, DLL plus consistency is the double zero on the roulette wheel. It is the house advantage. So when a firm has both of those, I don't like to trade it. You lose both ways. You lose when you go up, you lose when you go down. And who wants to play that, right? You have to basically drive your account in a very fixed sort of realm. And when MyFunded on the funded side has no DLL and no consistency, that really mimics the real trading account more than anything, which is why I call it the best. Here's the math coward. Thank you. So hopefully that makes sense to you guys. Does this make sense when we're talking about like why prop firms are good or not? Like I said, I was very honored that MyFunded asked me to be on the show because I considered them the best firm rules in town. And so, yeah. You guys understand what I'm saying about the DLL plus consistency removes the idea that you can use good news to wash bad news and even out, right? You guys understand in chat? We good? Yeah. Raphael, you had a $600 profit target to not go over. You had to set it. Yeah. So in your platform, you have to set a profit target to not go over, right? Yeah. Oh, I forgot there's like a minute delay when I ask questions. You guys hear me in chat. Cool. Whoosh fan Matt, you're 200 away from funded, Derek. All right. I guess for you, I'll give you a whoosh fan if that's okay. Whoosh fan is a rocket scooter thing, a Matt tradition on my own stream. I draw little fans just to kind of give the trade a little bit of a bump for people. Okay, cool. Awesome. Yeah, I forget there's a delay in chat. Whoosh. We need a Dyson whoosh fan. I'm not that good of an artist though. All right, so let's talk about something that happened today, just in the market. Some of the setups I took, liquidity map, and I'll just share it really quick. We're using gamma. I use gamma exposure models, and I trade off of high volume pivots that I can predict where volume will be based on options landscape. So the algorithm does it all for me. I load up, the day opens up, and the market just loads everything here. It gives me notes on the chart. This is all automated, by the way. It says support, tells me why. My confluence is off to the side. If it's support or resistance is off to the side. And market open right at monthly hedge pressure. And I'll tell you guys something really cool. Under ideal conditions where this orange line is in confluence, meaning that the orange line is greater than 0, then the orange line is support. And 90% of days, 90% will stay on the same side as orange line that it opened on. Today we opened above orange. Oh, this is open here on the equities. We open above orange here, and 90% of days will stay above orange. So this was A+ out the door. The universe felt bad for the last couple of days and decided to give us a good one. And inside of here, it was falling right to my A+ support. I loaded up right here on stream, and it was great. I use a combination of things to try to find my pivots. Now, again, to find my trade plan. Number one, the pivots. I know there's a 90% same side close rate. So if we open above here, we close above here 90% of days. It's very rare to break through it. When the confluence is there, is 90. When the confluence is not there, it's roughly 70 something, a little bit over 70. Either way, this orange line is we call them EST setups in my community. People say, I always bang my fist on the table and say, I trade this every single time. And as you see, it's been such a good ride every single time as just strong pivots all day long. Whenever I hit my pivot that's strong, I usually trade with a bigger position. I was hitting this with like 2 contracts, 1 to 2 contracts minis, and kind of loaded up pretty quick. It's a really good trade. Now, what I do is I'll draw an arrow from here to next resistance, and the next resistance will be just the next line. And when this line also says support, then I draw the next resistance, which is there. And if this line says support, I draw the next resistance, which is there. I can keep scaling the plan up to see how many different trades I can have in a single line. 1, 2, 3 legs of the same trade. And if I had 3 contracts, maybe along the way, I can take out, I can take a, I've had 3 at the start. I can take trim it there, cut it there, sort of thing. And every time I hit another pivot, it's a probability that the market pivots away from it. I just start to scale out as I get higher and higher up in the trade. I'm not the kind of person who likes to add to a winner. I like to take my trade and get out of the way. Had I added to any of these winners, I would be upside down for the day. I feel like adding to winners is something that a lot of traders do poorly. I don't like to add and hold for long periods of time. I'm the kind of trader that most of my trades are half an hour or less and I'm done. It keeps me out of the market so that I'm not swept around by news and Trump tweets a lot. In and out pretty quick. So like today was, a 10K day, which is pretty great. And again, I'm in and out. I'm not really spending most of the time in the market. I'm in the market from here to there, right? Actually, this is ES. Let me pull NASDAQ because that's what I was trading earlier. My total time in the market was like very, very, very short. I think I was in the market for maybe 10 minutes for the first trade, 10 to 20 minutes. Well, actually, this is closer to 2, 3, 4, 5, 6, 7, 8, 9. Yeah, about 10 minutes on this first trade. Then I waited, and then we bounced, and then right here I got back in 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes here. So first trade was 10 minutes long. Second trade was 9 minutes. I mean, I'm in and out, and I'm not susceptible to all the noise and news of the day. And then my third trade was here to here, which is about 7 minutes. So overall, like my average trade time on the winning side is quick. I'm very quick, and I know which setups are really good. I just take them and get out of the way. But I use all of it together, right? And so I use my confluences, and it's really cool because you guys will learn the more you sit here and watch me trade. I just use my only indicator that I use is this indicator at the bottom. I call it my Swiss Army knife. I use it for everything. The white line tells me that this is support and that is support. If that's above 0. If the orange line is above 0, it tells me that is support. If the blue line is above 0, the blue is support. So piecing it all together, everything that's support is going to be a long entry pivot on the bounce. Hold on, let me reload my platform here really quick. That's basically it. That time of the day, my browsers always crash at noon. It's just all my browsers crash. But that's it. I set up a trade plan every time. I do risk and reward on every trade. In a non-volatile environment, I put a 40-point stop under my A+ pivots. The A+ is going to be, this orange line is A+, which is like 90% ideal, 70% non-ideal. These are about 60% when you have confluence. So I call it a B setup. There's confluence there. The support here, here, and here. About 60% of days will stay on the same side as what is agreeance in here. Basically, if this is above 0, then the S&P is going to close, or NASDAQ is going to close somewhere above here. 60% of days. And it's certainly doing that right now. So I still call it a B setup because it's better than a coin flip, but it's not like every single time setup. As you see, it's choppy along the way. So I'm not all in long on these big plays, but the general direction is for I can sell when the market dips. And I got the confluence right here that's positive. I immediately say, well, we're going to be over here by the end of the day somewhere. And it just so happens it goes there. Resilience is by far the best indicator I've ever used in my life. And I use it for everything. And so today was a quick and easy setup day, as I just used the unwavering resilience to just throttle, my risk to full position size that I would do, because anytime the market dipped below the box, I'd trade it to the top of the box or to the middle of the box. And it looks like all day today, these plays have happened. So resilience is a gap fill predictor, by the way. And this play was just all day long, man. Here, 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 here. Pretty good. Very, 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 very nice. Do I need to call Microsoft for tech support for my crashing browsers? I know, right? I just installed a bunch more RAM. Thought that would kind of help out, but the memory, the browser only uses so much memory, so the RAM wouldn't. I didn't think the RAM would actually help that much. But in case I was RAM limited, which was, I was maxing out sometimes, but it's the browser tab just has like memory leaks on it. How often do I restart my PC? Every weekend I do. Resilience is based on it's an aggregate of what the stocks are doing. So this is a stock aggregate. What I do with resilience right here, let's use the orange one as an example. The orange one here. What the orange one does is it looks for every single stock in this is the S&P for an example, and this is NASDAQ. This looks at every stock in the S&P and every stock in the NASDAQ, what the stocks are doing relative to their own monthly hedge pressure. As we know, monthly hedge pressure is a very strong pivot off of it. The question is, what are all the stocks doing? This is gamma positive hedging, and this is gamma negative hedging, and the stocks and the index has one as well. So if the index is at its own monthly hedge pressure, I ask myself, where are the stocks? Well, The market cap, anything above 0, the majority of the market cap is above. So monthly hedge pressure is above 0. Then the stocks are getting a wave of delta hedging that's gamma positive. So most of the stocks should just be floating up away from its monthly hedge. Therefore, the index is more likely to be floating up to track it. It's easy as that. And I can go look at some of the stocks and be like, NVIDIA, yep, NVIDIA is above orange. Apple, yep, above orange, right? Above orange now and started above orange. Amazon, yep, above orange. You see that? So if all the stocks are getting pressed higher due to delta hedging, then the index is likely to flow higher. And it's weighted by market cap to kind of tell. The blue does the same thing. The blue line right here has blue line confluence. They're both positive. The white line is a gap fill indicator predictor that looks at the stocks inside of the middle of the gap. QQQ today closed here yesterday, gap down here, QQQ. So Nasdaq futures are tracking the index just like QQQ is. And the middle of that is my pivot point to say, to analyze all the stocks. Are the stocks above the middle or are the stocks below the middle? If you're above the middle, then market makers can raise price to look for sellers. Then it implies that it can go and fill the gap this way. If you're below the middle, dealers lower price to look for buyers. And then here, there's where buyers can be. Buyers and sellers are always at the open and close. That's the biggest volume candles of the day. So what I look for is, are the stocks tilting this way or that way? And the easiest way to explain it, there's a little more to it. But resilience will tell you if that's positive, it means that the index is lagging behind the net market cap, the sum of all the stocks weighted by net market cap. So example being is if all the stocks are sitting in the middle, resilience will be 0. If a couple of the stocks started moving above here and the rest were at 0 and the index was not moving, then resilience would go way up to say that the index needs to move higher to catch up to what the stocks should be doing. And if the stocks are filling the gap, then really what the indicator does, it says, well, if Apple just moved a little bit off the middle, then Apple has a long way to go to fill its gap. Then the S&P would adjust by this much if Apple did fill its gap. And resilience makes that analysis in real time. Is this, if the stock market, if I snap my fingers and all stocks were to fill their gap at the same time based on which side of the line they're on, then the S&P and NASDAQ will jump to a new value. And we compare its current value to the new value. And if it's lagging behind, then resilience is positive. If it's ahead of it, then it's negative. So it tells you the arbitrage between the index and the stocks they're tracking based on the MOC procedure, and MO procedure that closes the market. Long-winded answer, it's a gap fill predictor, and it's a leading indicator because it looks at moves that haven't happened yet. And it's a very brilliant indicator. One of my favorite tools to use. Here's an example. If NVIDIA is right here as it's dipping lower, our indicator will say, aha, NVIDIA is above the midpoint. So NVIDIA needs to move to 181.60 to complete its move. And therefore, if NVIDIA is right here, the algorithm knows NVIDIA is probably going to be here more than here. So the algorithm goes, actually, NVIDIA's anticipated value is this. So it takes note of every stock's anticipated value, whether it's open or close, and then adds it up, weighs it by market cap, and tells you if the index is leading or lagging behind it. I invented it. It's pretty cool. It's a gap fill predictor. It's very good at what it does. So whenever you see like NVIDIA here on the screen and it drops below half cap, everybody needs you to pay attention. If NVIDIA drops below the half cap, it can fall this low. Every time I say the word drop, I swear, this music comes out of nowhere.
It's giveaway time, the buzz is real. Spin the wheel for a major deal. Oh, my funded TV, the crowd's in line. Dreams are dropping like a neon sign. Oh, lights are flashing, prizes rain. Hope is calling out your name. Click and claim it's your big day.
70 free resets. Wow, thank you, thank you, thank you.
Fever's here to stay.
Wow. Oh, wow. 70 for resets. Guys, thank you. Thank you guys for that. Hey, do me a favor, chat. With all this love they've been giving us, can we get those likes up to 750? I see 650 in chat. Click that like button. Do me a favor. And don't forget to sub to MyFundedTV if you haven't, because this is great, man. I love getting free stuff. With your drops, tune in with the drops. With the what? Every time I say the word drop, apparently, I don't know. I think I have this magic wand that I say something. I feel like I'm like Voldemort over here. Drop the gold. He always, like he would hold his wand all funky like. Come on, Harry, pick up your wand, pick it up. So anyways, congratulations to the winners. Let's go, let's go, let's go. He said his name, damn it. You're not supposed to say his name. His name must not be spoken. Pew pew, pew 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 pew. All right. So anyways, back to resilience. You guys understand it's just a gap fill predictor. If NVIDIA is right here, then the algorithm will say, well, NVIDIA needs to go here. Therefore, the S&P will be valued a certain bit higher. And therefore, the S&P is lagging behind that implied move. And that's it. And we add up all the stocks together. Resilience is a gap fill predictor, and it's a leading indicator because it's looking at the move that hasn't happened yet. And it's very good at what it does. Let me explain to you how good it is. This white line right here, right? Again, the market's random, but it works more than it doesn't, which is all you care about when trading with Edge. In general, statistics are really good. Like I say, 60% of the time, it's really good. And again, random markets can be random. But the idea is 60% of the time, if this is greater than 0, then S&P is going to close somewhere above here, 60% of the time. So I use this to my advantage to say the S&P futures overshot and the stocks are already up here right out the door. As an example, let me go ahead and look at some of the stocks right, like when we open up, right? NVIDIA, within minute 6, NVIDIA is already at the top of the box, right? And so NVIDIA had already made the move on minute 6. And look where the S&P was on minute 6, right? Right here on the edge. And NVIDIA had already blasted up to go. So we're moving when NVIDIA is moving and some of the other stocks were. But you can see that, like, essentially, let me show you a couple more. NVIDIA kind of moved very quickly out the door. The first moment Microsoft opened, within minute 2, Microsoft's above the box. So you can see that within minute 2, Microsoft is up here, right? Meta was down below. I guess Meta was against the curve. So I'm trying to find some ones that were moving quicker through the box. Tesla took a little bit longer. See how the stocks are moving at different rates? Google, minute 1 was above the box. So you see how a bunch of stocks are going to be like all over the place. And we look at all of the sum of them together and weigh by market cap to see the net sum of all market cap. And even Google was above the box middle within a couple of minutes. So when we add it all up, you can see what the net sum of all the stocks are doing. And even though some were down and some were up, the indicator was indicating that right at about 42, like 7 minutes after market opened, everything cleaned up and was good and nice and steady. And then the S&P was down in here when majority of the stocks are filling their gap this way. So it's an arbitrage indicator. At exactly this moment in time, I had a hint that the stocks were aiming already for there. And so the index just rallied right up to it, right? And this is like literally one of my favorite indicators. Because there's not really indicators that are designed to be leading indicators because they're all tracking historic candles, right? What happened in the past. This indicator I created to make inferences about the future. It's looking at what the stocks are doing and what they will likely do. And as you see all day, this white line hasn't wavered at all. It's been above 0 all day. And literally the market felt bad for everybody and handed a second trade there a second ago. And bottom, it's when you get back to the top. So these are all opportunities to long back up. The only reason I can't is I'm consistency locked for most of this. I could have probably made a trade earlier while I'm here on the show with you guys, but I can only really trade in like one more account, I think, today. But yeah. Very, very nice. Thanks for 70 accounts, you guys. 70 resets. Really appreciate y'all. You're welcome. That's right. I asked them to do very well by my community and my show. I tell them at headquarters, I say, you guys take care of my viewers when we come over here. You take care of everybody in this hour. Lunch money, make it worth everybody's time. Everybody's could be on their lunch break. You guys could be reading a book at a Starbucks right now, listening to tunes in your car, but you tune in here to hang out with us, which is awesome, right? I really appreciate it. You guys come out at lunch and make sure we take care of you guys. There'll be boot camp today. There is boot camp today. 100%. So this is a pretty straightforward trading day. I mean, longs and shorts, both sides are getting just handed really good trades, depending on what your trading style is. I pretty much have nothing else to do for the rest of the day, which I am pretty happy with my gains so far. But yeah. All right. 12 minutes left. Guys, what else would you like to know? Any questions about what you see on my chart? And yeah, my boot camp starts today. We're on class 3 of the 20. Boot camp started this week. So this is class 3 of 20. And we'll be doing that tonight. What the levels are, yeah. This is the close. Okay, so I'm looking at S&P futures. This is SPY close, SPY open, and half gap is the middle between open and close. Equity sesh. Hedge pressure and monthly hedge pressure. Let me open up NASDAQ because they're going to be in different places. You'll be able to see both of them. The orange and blue are gamma exposure levels, which are high volume pivots. When you open above, it pushes away from it. When you open above, it's a support pivot usually. When you open above blue, it's a support pivot. This is based on the options of QQQ. And so for NASDAQ futures, I use it as a high volume pivot. It's a predictable high volume pivot based on options, basically. And gamma exposure just means volume. So when you get to these levels, there's going to be a volume spike. And I look for volume when I'm trading as entries, right? So entry pivot. The box is like an entry zone to play through. And all of them together just kind of allow me to set up, trade plans. And pretty simple. Resilience, Gracie, rewind the stream because I described it for like the last 15 minutes. What indicator is that? It's called liquidity map. Gracie's dying to know the indicator. Yeah, I feel like it. It's called liquidity map. There's a hedge pressure on your lap. You stop that right. You stop that right now, Tim. Bootcamp will be the best $20 you'll ever spend. No, thank you. Thank you for that. All right. So today, pretty much chill. I like the idea that we've moved higher. We still have this sort of kind of like strange sort of pre-expiration volatility. Remember, tomorrow's monthly options expiration. So market's gonna be a little crazy. Let me find my where did I put that? Is this the one I'm looking for? Hold on. Nope. That's somebody made that. Somebody made this. Like apparently Matt going to school. I'm trying to thumb through my oh, here it is. My screens. There we go. This is what I was going to look for. So FedWatch, right? PPI came out today. FedWatch hasn't changed. There's still about a 95% chance of a rate cut in the September meeting, which is good. But PPI came through as a pretty big miss today. 3.3. It's starting to finally realize tariff stuff, right? PPI is the cost after producers are selling their products. So an example is you import something, you make something, then you sell it to a distributor and they sell it to retail and they sell it to you. You selling to distributors, selling to whoever, your prices are going up because you're passing tariffs on to your distributors and your middlemen. That's what PPI is going to tell you. So PPI is telling you, at least on the production side, manufacturers are not eating the cost of tariffs. Or you get a huge bump up against the expectation and the previous. So this was huge against what people thought would be 2.5. That means that can possibly bake into consumer prices, which is CPI, what we got earlier in the week. And CPI is not showing, any downside either. So some of that is trickling through to the consumer side as well. CPI has been slowly trending up, and this makes me fear that the next CPI is going to continue and trend higher. Now, the Michigan numbers, which we get tomorrow, are going to reflect a new data point, which are stating that they expect about 4.5% inflation by the end of the first year. And the estimates are 4.4 and 4.5. And we'll see if we come in better than that. It has been coming down since Trump has kind of tacoed on some of the tariffs, but it's still high enough. 4.5 is the ultimate number a year out, forecast by everybody's calculations. And CPI is kind of moving up closer to 3. So what that's telling you when you pair it up with PPI, he's talked about that like earlier in the week, is that PPI is showing that the tariffs are kind of being passed down the chain, and whether it stops at distributors or stops at retail or stops at your pocket, it looks like it's going up for everybody. It's not going up as swiftly on the CPI just yet, but there could be a delay and those costs hitting the shelves. Now, remember, you buy something from Walmart now, it's been sitting on the shelf for maybe a couple months, maybe a week, maybe a year, who knows? But the thing is that the things sold to Walmart now will have the price in them. And when you buy them 3 to 6 months from now, that price will be reflected. Remember, if you bought something, you sell, you have a stack of plates that you bought and you have, your warehouse is full of them in your store. You might have had them sitting there for 2 or 3 months before the tariffs were even a thing. And you're still selling them at that cost you paid for them. The tariffs have hit, but you haven't bought any more yet from your supplier. So now when you buy them from your supplier, they should be more expensive. The trickle down goes from PPI to distributor to retail. So retail is not feeling the tariff yet because they're still pushing through that inventory. You logistical people will know this. They're still pushing through the inventory that they bought cheaper. Now inventory is likely going to go up. If PPI is going up, it means it's only a matter of time before CPI goes up. Pre-PPI. PPI. That's tongue twister if there ever was one. You guys understand that? So when PPI is going up, that's kind of bad news for CPI. It's likely over time to continue to raise, which just means the Fed is likely going to have fewer and fewer opportunities to cut rates. So Matt is struck at PP. Exactly. Yeah. Blah, 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 blah. So anywho, this is the problem. We don't want to see the PPI going up. We don't want to see the top line of the chain going up. We'd like to see the producers who are getting hit with the tariffs be like, you know what? Let's not raise prices. But they don't seem to care if this is the case. Now, this maybe just be one data point. One data point does not a trend make, per my high school math teachers. Multiple data points are needed. So we'll see. We'll see if it gets better. And even the Fed chair being changed won't change the outlook. Remember, the FOMC is a voting body of members, right? I don't think that we're going to get, even if Powell got replaced, I don't think it's going to change the sentiment of the members themselves. More and more members are voting on or believing that we don't need rate cuts. We saw the dot plots are rapidly shifting towards we don't need to be doing rate cuts. More people are. Remember, 4 people in December believed we don't need a rate cut this year. In March, 7 people believed we don't need a rate cut this year. Now, the majority still believe we needed 1, maybe 2, but the dot plot's showing that more Fed members are like, we shouldn't be cutting rates at all, which means we wouldn't be cutting rates next year either. And so as the next dot plot comes out, which is soon, we'll see if that's 10 or 15 or how many people think, the September rate cut potential. We should be getting one maybe, but I don't know. It's trending to the fact that they may do a ninja no cut on us when Wall Street's pricing one in. So we'll see, right? This PPI is certainly going to shock a lot of members at the Fed, all right? So, yeah. So basically, is the Wall Street rally built off of taco or what? But today's, the selling pressure today clearly was stemming from the idea that people are thinking all the way through, like I am, that PPI is bad news for the longer haul. It doesn't mean it's bad news for now, but it does mean that the Fed rate cut potential is going to probably dry up. If we're going 3 and 4% inflation, you guys can kiss 2026 rate cuts goodbye. So I don't think that's going to happen. I think we might get our 1 rate cut for this year, and we maybe get one next year at 3%. Maybe not. Fed wants 2% inflation. Michigan's calling 4.5%. So, right. So as a trader, I got to say, I don't think, and again, how much is a rate cut can even matter to Wall Street anyways, right? Probably not, but we'll see. Now with high interest rates, high inflation, you have to think about, credit this time. Like interest rates going to be higher. Things cost more. Risk of default goes up. So interest rates going to go up on loans and everything. It has a trickle-down effect on everything. Inflation kind of hurts and slows down things, slows down the economy, slows down production. People spend, buy fewer things, and then credit is issued less. It's harder to get credit. So spending slows down. It's inflation just sucks altogether, right? But I don't use this idea as saying, well, the market's going to be bearish today. The momentum is still there. But I do see that this pretty big point in PPI, if we get another one, the market's going to flip out again. If it starts trending higher. Now, again, Michigan numbers are pricing in 4.5, so it's not beating that. But what if the PPI starts coming in at 5 and 6% on the front end of things? Oh, God, it's going to be terrible for the back. And you have to think that everybody adds a surcharge to cover their own inflationary cost and also get a profit. So for 3% on the PPI, who knows what the CPI is going to be at, right? Yeah, I don't like it. I don't like it at all. But then again, the question becomes, is 4.5% or 5% even that bad? And when you think about, the numbers, you might say, oh, God, that seems bad, But then I'm like, are we just being spoiled? Because, back in the era of, I don't know if this goes as far back as that, but if you look at the CPI chart, overall time, there's periods in history where, inflation was 10% greater. When I was a baby, it looks like the CPI equation was coming in at a big fat, 13 and 14%. So is 3 and 4% even worth it to even care about, right? Bull market of the 90s. Remember, from 1987, since the market crash, all the way up until 2000, since the next market crash, was a 13-year period of the market rallying. And throughout that time, in 87, we had 4 and 5% interest, and 5%, 4%, 3%, which is about where we are now. And the market rallied without a care. So I don't like to say inflation is a doom effect on the market immediately. We certainly held through that. Now, the CPI equation was recently modified, so I don't know, adjusted to the new equation, what the inflation numbers actually were. If I remove this is the new CPI equation, what the actual numbers were in the old effect, but they were higher than what they are now, probably. CPI equation was changed in 2022. 2021, 22. But anyways, the market has rallied in periods of high inflation regardless. All through the 90s was a rally, leading into the dot-com bust. And, at the time, leading up to the 95 and 96, Alan Greenspan was also cutting rates. And then 96 and 97, after Clinton got elected, he started raising rates very quickly, which I thought that maybe he was just cutting rates to boost the stock market into the Clinton election. Well, then you put your tinfoil hat on for that one. But either case, it was the same effect. You were getting small rate cuts leading up to the 95 election. And then in 96, they started raising rates. And then market crash in 2000. So it's almost the same setup as it was that long ago, by the way. And so is 3 or 4% inflation going to crash the market? The 90s tells you otherwise. Okay. So hopefully this is a little information for you guys. I don't really think rate cuts are a big deal, or inflation's that big of a deal anymore. And Wall Street doesn't seem to care. I think Wall Street has a really fresh memory of the 90s as well. It's almost the same exact setup. Instead of dot-com bubble, it's AI bubble. President-elect, raising rates, cutting rates a little bit at a time, and same thing, right? Anywho, that's what I think. Anyways, guys, my time is up. Like I said, thanks for coming over. I have a good time hanging out with y'all. I try to teach you fundamentals and technicals and chart reading and risk management, everything I can, as much as I can. I try to talk about the boring stuff to make it entertaining, so at least you guys learn something. Fundamentals are so boring, I know. Everyone wants to talk about PPI and CPI, but it's important as a trader to understand that. I'm going to spam my link in chat. I'll be live for the afternoon. You guys can hang out with me and watch the rest of the trading day. I do giveaways also on my stream. I love you guys. Thank you, MyFunded, for the 70 free resets today. That's amazing. Don't forget to like the stream on the way out and sub the channel, you guys. And I will see y'all later. And my link is in chat, so I'll be streaming afternoon. So Gracie, come over. I can tell you more about tools or whatever. So thank you, guys. I'm out of here. My name is Matt. We'll see y'all tomorrow, front and center. Bye-bye.
Yeah. Charts scribbled like hieroglyphs, secrets in the mist. Candlesticks whisper, every wick got a twist. Fibonacci spiral, price dance in a trance. Pyramids of profits if you catch the right glance.
Inner circle moves, shadows on the screen. Trading on the edge, chasing that dream.
Liquidity hunt, snipers in the dark. Stop loss graves marked by the market shark. Order block sermons, preaching through the pain. Catch the ICT code, ride the